S&P futures pretty flat to negative. Nasdaq futures look a little worse than that, but not excessively so. Maybe some nervousness around Powell and what he might say later. US two-year yields in focus, pretty flat this morning, but the story of November, of course, has been these yields coming downwards. So interesting to keep an eye on how low we go. 4.68% is where we trade. A lot of volatility on the Brent price, on the WTI price yesterday, as we heard from OPEC Plus and about those cuts coming through. But a lot of questions around whether the voluntary nature of some of it will mean much in reality. So Brent is down 0.3% this morning. Let's have a look at the futures picture. I mentioned how it does look positive, and certainly positive in contrast to the United States. So perhaps picking up on where Wall Street was after we closed yesterday. But DAX, FTSE and CAC futures all suggesting a little bit of upside. The FTSE, which has underperformed in a couple of sessions recently, is expected to be up by around 0.5%. So let's see if we manage to make those kinds of gains this morning. So a sluggish start to trade then. We see the FTSE 100 opening up by 0.2%. We'll see how high that goes. Not too much action to talk about when it comes to FX markets. Of course, the story of November has been weakening yields and weakening dollar, but the dollar pretty flat this morning, the euro fairly flat, as is the pound. We've had some data out on the housing market in the UK. More on that in just a moment. This is the sovereign bond picture, which actually, interestingly enough for Europe, looks kind of mixed. This time yesterday, we were talking about the weak inflation, weak GDP out of France, and that was sending yields lower. That was pushing the bond demand higher and sending yields lower. Today, we see a much more nuanced picture across different parts of Europe, and actually the UK stands out as a little exceptional. A mixed picture on commodities this morning. As we head into the start then of the European trading day with some decent gains. The German DAX up by 0.5%. On a sector breakdown then, let's have a look at where we are. So the DAX outperforms a little bit. What do we see in the sector picture? We're pretty flat on healthcare stocks. Personal stocks are down 0.1%. Consumer stocks down by 0.2%. We'll see whether LVMH is weighing on those types of sectors. The insurance sector doing okay. Basic resources rebounding this morning up by 1.5%. So some volatility there to go along with the volatility we've seen in oil prices of late. Let's talk to Sophia Halter-Acosta from the Markets Today blog. And Sophia, I mentioned the house price data we just broke at the top of the last hour, in fact, coming through from Nationwide. A slightly better than anticipated story to tell. Take us through some of the details.
So a surprise rise in November. This came out after a surprise rise in October as well. So UK's property market is really defying those expectations for a slump. I really like this detail from the story from Lucy White, our colleague on the London economics team, saying that actually the average house price right now in the UK is 5.6% below the peak in 2022. And economists had predicted it would be 10% a drop this year. So really a lot better than expected. And this is data from Britain's largest mortgage, one of Britain's largest mortgage brokers. So it does paint a kind of cohesive picture of the economy. Data earlier this week also showed mortgage approvals were higher than expected. So, Anna, maybe that slump in the property market isn't coming.
Okay, yes, really interesting, but maybe not as many forced sellers as all those economists had expected to see coming out of the woodwork as we track the house prices through this particular part of the year. Let me ask you about what's going on then with the Bank of England and rate expectations. We keep hearing from Bank of England policymakers. I was thinking of Megan Green just last night, talking pretty hawkishly about the threats from rising inflation still, or the threats from inflation still, and what they might need to do about that. Some hawkish commentary coming from the BOE this week.
Yes, and Megan Megan Green was one of the rate setters that actually voted for a rate increase at the last meeting, one of a minority, obviously, when the BOE actually held rates. And this is quite relevant to what's happening in the property market, obviously, because if people do think that interest rates have peaked, then that's why you're seeing kind of that feed through better consumer sentiment, a little bit more optimism, a clearer picture for how the outlook for interest rates looks like. But Megan Green really saying that there's still more to be done. There's a risk that inflation might prove to persist for longer. And she says, actually, UK rates appear to be less restrictive than perhaps they thought, because you do have signs of resilience in the UK property market and also in those PMI figures that we had last week. So she's really, I mean, it will be interesting to see whether she votes again for a rate increase at the December meeting.
Okay, let's go to, staying with the UK and thinking about where politics meets the climate ambitions. It's become fashionable, it seems, in the UK for the government to talk about the dialing back of some of its climate ambitions, perhaps thinking that plays well for voters. But on the international stage, a different message from Rishi Sunak at the COP event.
Very much a different message. So pledging to spend 1.6 billion to try to show that he is on message when it comes to Britain's commitments to climate goals internationally. And this is obviously as he travels to the event being held in Dubai. It's part of almost half of it is new funding. So this is not included in an existing 5-year plan that runs until 2026. So really trying to show that Britain is still committed to these climate goals despite that pushback, or people have said it's been a reversal from the current government on some of those promises.
Okay, Sophia, thank you very much. Thanks for the briefing. Sophia Halter-Acosta from our Markets Today blog. You can get more from the team. The front page of the Bloomberg UK website will take you to that blog, or you can go to TLIV Go on the Bloomberg terminal. Let's have a look at some of the events that we're following today. At 3 p.m. UK time, we'll get an update on the US ISM manufacturing data. The print is expected to show the sector remains in contraction for November. Mark was flagging that as a focus for traders later on today. Then at 7 p.m. UK time, another focus, of course. Fed Chair Jerome Powell and Governor Lisa Cook are expected to take part in a university roundtable discussion about tech innovation and entrepreneurship. Will any comments around monetary policy sneak into the mix with that on the agenda? And back to climate, COP28, of course, enters day 2 in Dubai. We'll be bringing you conversations today, including with the Greek Prime Minister, Kyriakos Mitsotakis. The relationship with the UK, clearly topical. AstraZeneca's CEO, big listed UK company, also speaking to us. Pascal Soriot will join the team on the ground from the COP events in Dubai. Coming up on the programme, we'll take a look at the stocks on the move, including the UK supermarket Tesco, which gets a downgrade at JP Morgan. This is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
This is Markets Today. We are 8 minutes into the European trading session, and it's actually turning out to be a positive one. We have some decent gains across European equity markets. Let's check in on some individual stocks on the move with Joe Easton. Joe.
So we're starting with some rating changes on the first board today. Anna, firstly, the one that we had at first in stocks to watch, LVMH cut to equal weight at Morgan Stanley. Now, they've had an overweight rating for 6 years, but cite a slowdown in luxury sales and also company-specific issues like increases in Louis Vuitton bag prices that are alienating some aspirational buyers, according to them. So they downgrade that one. We see it dropping around 0.9% over in Paris. Then a couple of grocers as well, Tesco and Metro AG, both underweights at Morgan Stanley due to food price inflation declining. Not good for the bottom lines over there. They describe the margin outlook as grim for both of them. Tesco falling around 2% at a discount. That might be the club card price on that one. Pretty pleased with that joke. Metro Bank AG, they're also slipping down as much as 4% over in Germany. And finally, at the bottom here, we've got SocGen cut to sell at Goldman Sachs. Now, Goldman has a big note out on the banking space today. They've also downgraded AIB in Ireland, the big Irish lender. There they cite the declining rates forecast, and that will potentially hit net interest income going into the next year. Check out that note. That will be covered on the terminal very shortly. Then we'll flip over and look at a couple of other movers. So Bechtel, now this is office supplies over in Germany. They've issued a big convertible bond overnight, so that is potentially going to dilute the stock. Those bonds can be exchanged for equity, so it's a dilution for them. Jenoptik, now this is a laser technology company also over in Germany, looking pretty good on the margins. Those have been upgraded in a statement today. And then a massive stock absolutely plunging. This is Viaplay over in Stockholm, the streaming service, doing a huge capital raise, potentially wiping out a lot of investors on that stock. Very negative, and analysts questioning the future of that company as a listed stock. So down 77%. We won't see a bigger mover on the main markets today, I don't think. In terms of another UK mover, we've got Ceres Power. Now, they issued a profit warning after the close of trading last night. This is the utility firm in the UK. They've had some issues with licensing. They're based out in Horsham in Surrey, and they are struggling to get some of those approvals at the moment. So dropping as much as 17%, another big decliner we've got today. Then we're going to flip over and have a look at these defence stocks as this ceasefire does end over in Israel. Lots of nasty scenes coming out from there, but as I said, in stocks to watch, potentially that is lifting sentiment on some of these defence firms that have seen their budgets increase massively across governments around the world, and we're seeing some of those losses after the ceasefire eroded this morning and seeing some green over in the defence space.
Joe, thanks very much. Joe Easton from our equities team. Quick check on the broader markets then. Joe's taken us through some of the detail. More broadly, the Stoxx 600 then is up by 0.5% this morning. Some outperformance on the London market, which is running against the theme year to date, but the FTSE is up by 0.8%. The CAC 40 and the Xetra both up by around 0.5%. Basic Resources, the best performing sector. Let's talk to Michael Metcalf, Head of Macro Strategy at State Street Global Markets, who joins me on set this morning. Michael, very nice to have you with us this morning. Let me ask you about the broad stock rally that we've seen in November and where it goes from here. Does this have legs through December, legs into next year, or does it look vulnerable to you?
I think it depends an awful lot on what the central banks do. And I think this is a repeat of a narrative that we've seen throughout this year, is that bad news has been viewed as bad news on the economy has been viewed as good news because it might deliver rate cuts. And so, I think we've come an awful long way quite quickly in November. And it's hard to imagine markets getting more excited about rate cuts, particularly in the United States right now. So it might not have legs because of that.
Yeah, talk to me about the relative pricing in bond markets around rate cuts, because you pointed out to me, which I found interesting, that the rates markets are still discounting more cuts in the US than in the Eurozone. And given the weakness in some of the data, the moves lower, substantially lower in inflation that we've seen, sure, in both locations, but in particular on the ECB side, not far from target really now on inflation, and the growth picture also looking much weaker than the United States. That seems strange pricing.
It is. I mean, I think the market logic was probably that inflation in the Eurozone had been a bit stickier. It certainly wasn't the growth outlook, because the recession in the euro area has probably arrived, and we've been waiting for it all year, and it now has finally arrived at the end of the year. But I think it was the inflation question, and yesterday's data was a really positive surprise for the ECB, and I think it's going to be increasingly difficult for the hawks on the ECB to kind of push back against easing expectations. So I do suspect that in the coming weeks and months, if that number is confirmed, then the expectations of rate cuts will start to even out in both the euro area and the US.
We're just waiting for the Spanish PMI data to hit, and in fact we'll get some further PMI data from various parts of Europe this morning. So we'll get, that'll give us a clue as to the path ahead. But do you think that inflation print was quite a game changer in terms of the European rates story? We saw markets quickly moving to price in rate cuts from as soon as April next year.
Yeah, I mean, I think we always have to be careful about reading too much into one number. But if that is the direction of travel, and look, it sort of makes sense, because the growth data in the euro area has deteriorated quite significantly in the second half of the year. And I think we know from both the US and the Eurozone that goods price inflation has corrected quite significantly, and we've just been waiting for the demand side to start to pull inflation down. That is now happening in the euro area. So I think that's assuming it continues, then I think it brings forward ECB rate cuts.
We're just getting that PMI data, in fact, still in contraction, below 50, but better than expected and better than the prior period. So 46.3 is the Spanish manufacturing PMI. That's better than the 45.5 that was surveyed, better than the prior period. So perhaps that plays into that idea that we are seeing some bottoming out in the European story. Is that where we are?
Yeah, I mean, it is kind of interesting, isn't it? Is that if a 46 reading on a PMI could be an upside surprise, it does tell you just how negative sentiment has been towards European assets. But to be frank, for most of this year, and we've been waiting for the recession. It didn't come, and now it's arrived. But I think we shouldn't necessarily think of it as a negative, because I think everyone is ready for a recession in Europe.
Yeah, we'll see. We'll get the German data a little bit later on, and we'll see if we still get a 42 handle on that manufacturing data. So some quite incredible numbers there. Let me pivot to the UK story. The conversation clearly around rates also relevant here. But actually, I want to ask you about stocks in the UK. We've talked to a lot of guests who say we like energy as an inflation hedge still, even if inflation isn't coming down, and we still like banks, even if maybe they don't make quite so much money on the rate hikes or if the rate hikes aren't delivering for them in the way that they were. So with that, quite a few guests talked to us about that preference, and yet the FTSE still underperforms year to date. What are your expectations around the UK?
Well, I think we'd agree on the energy side, and so and obviously right now there's some uncertainty around the supply side in oil in particular. However, it does look like you're going to get a supply response that will kind of cushion energy from the downturn. And look, the lesson of the last 2 years has been you have to be quite wary of inflation coming down, or that assumption. That's where all the year ahead pieces for the last 2 years have been wrong on that particular point. So I can understand why we'd want to kind of keep energy as a hedge because of that. I actually think on financials we're still a little bit more defensive ourselves, actually, and I think in particular, even though rates have gone up, there is this kind of lingering recession risk, not just in the Eurozone, but actually we think that there's still quite heightened recession risk in the US as well.
Yes.
And so that keeps us quite defensive on financials.
And actually I wanted to ask you about that, about the recession risk in the US, both the extent of it and the timing. When does it transpire, or when do we get these firm clues that it's really coming? Because the soft landing narrative is still what seems to dominate for a lot of guests.
Yeah, well, and look, I think that's...
Not Mark Cudmore, my colleague.
I see that. I see that.
He's not a fan of that theme.
But look, that's kind of understandable if you think where we're coming from. So, Q3, 5% plus growth, reasonably low inflation. So that looks like Goldilocks. However, looking forward, I think that the most likely source of recession is going to come from the credit side and through the banking channel, with bank lending becoming more constrictive, and eventually just beginning to feed through into the labor market. We're seeing just small signs of cracks in the labor market. And I think the interesting thing is in the Fed's own forecasts, they don't forecast much of a rise in the unemployment rate. So the Fed is set up to be surprised by unemployment of 4.2, 4.3%. And I think that ultimately is the thing that will deliver the easing that the market is currently expecting.
Okay, so you're suggesting unemployment doesn't have to go that much higher before we get easing? Is that what
Yeah, I think so. Compared to and so it's really interesting how the Fed changed their forecast. So, they revised growth up a lot this year, but they revised unemployment down throughout the forecast period. So it's very easy for them to be surprised on any kind of labor market weakening.
Okay, Michael, thank you very much. Michael Metcalf, Head of Macro Strategy at State Street Global Markets. We thank you for your time this morning. Thanks for joining us here on the programme. We are covering the COP events over in Dubai, of course. That's one part of our programming. We are also bringing you live images this morning from the ECB Forum on Banking Supervision. This has got underway, and we're actually looking at the Fed Vice Chair, Michael Barr, speaking. He's currently talking to those assembled about what's happening. We'll be looking out for any breaking lines coming through from him this morning. Okay, Michael Barr saying that the discount window is a financial stability and monetary policy tool, which is interesting, making that link there. Also saying that the Fed discount window borrowing shouldn't have a stigma, referring to banks' willingness to go ahead and use that facility. And so we are monitoring this conversation then, or this address that we're seeing from Michael Barr, who's speaking at this ECB event. 8:19 here in London. European stocks making gains up around 0.5% on European stocks this morning. Coming up on the programme, a week after some of the most dramatic events at OpenAI, we take you through what happened and what it means for the future of artificial intelligence. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Names in global leadership are on Bloomberg.
What we've just delivered are significant tax cuts. For business, we will be the only major G7 economy, certainly, and even broader than that, where you get a total write-off against your taxes for capital investment. And it comes on top of the fact that our corporation tax rate here is lower than any other G7 economy. That's an incredibly generous regime to attract business investment.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
This is markets today, 8:22 here in London. European stocks trade a little bit higher this morning. US futures look less convincing, flat to negative on those. Let's get to some of our top stories this morning here at Bloomberg. The Israeli army says it is resuming combat in Gaza. That's after the IDF said Hamas violated the terms of the ceasefire by firing towards its territory. There was no announcement from Qatar, the main mediator in the negotiations, as the deadline for the week-long truce ended. It comes after the US Secretary of State Anthony Blinken warned Israel not to repeat the scale of destruction and displacement in northern Gaza. The Gaza Health Ministry, which is run by Hamas, says more than 15,000 people have been killed since the start of the war. On to corporate news, and Ford has lowered its profit guidance, blaming the cost of higher wages from its new contract with the United Auto Workers Union. Ford says adjusted earnings before interest and taxes for the year will now be between $10 and $10.5 billion, down from the $11 to $12 billion forecast in July. Speaking exclusively to us, Ford CFO John Lawler also warned of falling prices for electric vehicles.
We've seen prices come down in the electric segment much quicker than we expected. And the reason for that is that we're moving out of the early adopters who are willing to pay for higher prices. Early majority of customers aren't. They're not willing to pay that premium. So we're seeing those come down, and we expect them to equalize with gas prices. So it's all going to be about cost and efficiency, capital efficiency, et cetera.
Sticking with electric vehicle themes, and Tesla has finally delivered its first batch of Cybertrucks to customers after 2 years of delays and production snags. The vehicle comes in 3 configurations, including a rear-wheel drive, all-wheel drive, and the so-called Cyber Beast. The cheapest version of the Cybertruck will cost close to $61,000. That's more than 50% over the price Elon Musk floated when he announced the vehicle in 2019. Sam Altman's firing as OpenAI CEO has revealed the ideological and financial battles that gripped the world's best-known AI startup. More than a week after his return, Bloomberg unravels what happened and what it means for the future of AI.
Why should we trust you?
You shouldn't. No one person should be trusted here. The board can fire me. I think that's important.
Those words would come back to haunt Sam Altman, the CEO of the hottest startup in tech.
Sam Altman, the co-founder of OpenAI, being forced out by the board.
OpenAI was founded with one stated mission: to build a superintelligence that is safe and benefits all humanity. It also appeared to be the reason why Sam Altman was fired, for chasing the money at the expense of the mission.
We saw basically like the forces of capitalism assert themselves in a way that was kind of breathtaking.
These tech companies might not be making tons of money off of the AI products per se, but they will be making money from their customers who are paying for the compute services for it.
And that compute power sits in the cloud, which is a big business for Microsoft, Amazon, and Google. It's also extremely profitable. Consider this. Amazon's cloud business has made a cumulative profit of $55 billion over the past 3 years. Everything else it does combined have made a profit of just $5 billion. That's why everyone wants to get into AI, and it presents a huge risk for Microsoft.
These tensions that caused Sam Altman's departure are not going away.
And Microsoft, which is answerable to shareholders, looks set to wield a lot more direct influence at the startup.
Alex Webb with that report. You can catch the full Bloomberg Originals documentary on YouTube. That just a brief snippet of a wider, longer form documentary. You can find that on YouTube, and subscribers can watch it on the terminal and at Bloomberg.com. Coming up on the program, we'll go back to COP28 in Dubai and speak to Vanessa Nakate, a climate activist and UNICEF Goodwill Ambassador. You're seeing live images of UN Secretary General Antonio Guterres giving his address to the conference. A number of world leaders set to address COP28 in Dubai later as well. This is Bloomberg.
world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power.
Balance of Power. Live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
I'm a conservative, but I'm not in a bad mood about it. Fellow
Who's in a bad mood about being conservative? That's because you feel like populism has taken control of your party?
And Joe Matthew.
What is it about race that bothers you about the new chairman of the Joint Chiefs?
Our military is becoming so political that we're going to go south when it comes to readiness.
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
I'm willing to have this battle. It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg. Context changes everything.
From New York City,
from London and Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. Stocks in Europe moving higher ahead of comments from Fed Chair Jerome Powell and ahead of euro area manufacturing data, which may add to the case for the ECB to lower borrowing costs. Israel resumes strikes on Gaza after a truce with Hamas ends. Washington asks Tel Aviv to obey international law amid mounting civilian casualties on the Strip. Plus, an early win at the COP28 conference after nearly 200 nations agreed to, or how, to run a fund to help vulnerable countries deal with extreme weather. We are live in Dubai. Welcome back, everybody. Quick check on the markets then before we return to climate themes. This is the picture on European stocks, making some modest gains this morning, up by 0.3% broadly across the Stocks Europe 600. Let's roll on and have a look at what we see on the sectors. We see a little outperformance on the London market, and last time we checked, basic resources doing pretty well. That continues to be the case. Basic resource stocks up by 2.2%. So some better data coming out of China, perhaps changing the story from yesterday around the basic resource space, and we're up by 2.2%. That all thanks to the Caixin number coming out of China a little bit earlier on today. So overall, a positive picture. The DAX higher, the FTSE higher, and most sectors in positive territory. Also, although autos, interestingly enough, just dropping into negative territory. That's the markets. That's where we are in the here and now. Let's think about broader climate themes. Day 2 of COP28 is underway. That's after the climate summit scored an early win yesterday as negotiations got underway in Dubai. Nearly 200 nations agreed on how to run a fund to help vulnerable countries to deal with more extreme weather. King Charles is speaking at this point, so let's listen in.
Paris Agreement, a landmark moment of hope and optimism when nations put differences to one side for the common good. I pray with all my heart that COP28 will be another critical turning point towards genuine transformational action at a time when already, as scientists have been warning for so long, we are seeing alarming tipping points being reached. I've spent a large proportion of my life trying to warn of the existential threats facing us over global warming, over climate change and biodiversity loss. But I was not alone. For instance, Sheikh Mohammed's dear father, Sheikh Zayed, was advocating for clean energy at a time even before the United Arab Emirates as such came into being. All these decades later, and despite all the attention, there is 30% more carbon dioxide in the atmosphere now than there was back then, and almost 40% more methane. Some important progress has been made, but it worries me greatly that we remain so dreadfully far off track, as the Global Stocktake report demonstrates so graphically. The dangers are no longer distant risks. I have seen across the Commonwealth and beyond countless communities which are unable to withstand repeated shocks, whose lives and livelihoods are laid waste by climate change. Surely, real action is required to stem the growing toll of its most vulnerable victims. Repeated cyclones batter vulnerable island nations like Vanuatu and Dominica. India, Bangladesh, and Pakistan have been experiencing unprecedented.
The UK's King Charles there speaking at the COP28 event in Dubai. Before we heard from him, we heard from Antonio Guterres of the United Nations, the Secretary General, calling on the assembled world leaders to act, calling on fossil fuel companies to act. Listening to all the proceedings in Dubai for us and across all these conversations, Bloomberg's Jennifer Sabasaja joins us now with another conversation. Jen, good morning.
Yeah, Anna, good morning to you. I am joined by climate activist and UNICEF Goodwill Ambassador Vanessa Nakate, also from Uganda. So Vanessa, we were just hearing King Charles there speaking, and he was saying that he hopes COP28 is a critical turning point towards transformational change. Based on what we've seen so far, would you describe it as that?
Well, thank you so much. So yesterday we saw the operationalization of the Loss and Damage Fund, which I believe is a step in the right direction. We know that many communities on the front lines of the climate crisis are already suffering loss and damage. They cannot adapt to the loss of their cultures, the loss of their identities. So it's really important that this fund was operationalized. And we saw a number of pledges coming in. But many of these pledges came in millions of dollars. However, the costs of loss and damage are in billions of dollars. So what we need to start thinking about is how to turn these millions into billions for the people on the front lines of the climate crisis, and how to ensure the sustainability of this fund for a long time.
Do you think, because last year I was speaking with you at COP27, there were a lot of pledges and promises that were made. Are we on a good trajectory right now to seeing a lot of these promises being fulfilled, or do you think there needs to be a new approach potentially at COP28?
Well, I think at COP28 we need to talk about the issue of accountability and trust as well, because we've seen a number of pledges that are made, but then they're not fulfilled, but then they are broken. So it's really important that the pledges are not only made, but they are also fulfilled, because that is what really builds trust.
What do you think, what are some of those that you're alluding to? I mean, what were some of the pledges that were broken in the past few months?
So we know that some of the, climate pledges that have been made by government leaders, for example, with the UK government, have been broken. The UK government has gone back on its climate pledges. It has approved, new oil and gas licenses. And we know that fossil fuels account for 75% of global greenhouse gas emissions. So simply put, they are the problem. So as much as we talk about all the pledges that are coming in, if we don't address the root cause of the climate crisis, then everything else is a distraction.
What role, Vanessa, do you think fossil fuel companies have in this? And also, you and I were talking, we live in a part of the world where a number of populations are still reliant on fossil fuels. So how do we work that into the discussion as well?
The only acceptable role that fossil fuel industries have is to phase out fossil fuels. And when it comes to communities like ours, we know that fossil fuel companies have promised to lift people out of poverty for decades. And yet, 600 million people in sub-Saharan Africa alone still don't have basic access to electricity. So it makes me realize that what people need is not fossil fuels for electricity. People need energy, because fossil fuels have not been able to deliver that to the 600 million people in sub-Saharan Africa. So I think that African nations, they have, the ability to lead the world on renewables. Africa as a continent has, 39% of the world's potential of renewables, and yet it receives only 2% of global investments in renewables. So we have to talk about the issue of finance to help African countries to invest in renewables and scale up and lift their communities out of energy poverty.
So what would, in your mind and in the activist community, would then be a successful COP28? Because that is a tall order, right, that you've sort of lined up right here. What are you looking for come December 12th?
The International Energy Agency has, made it very clear that if we want to have a fighting chance of 1.5 degrees Celsius, we cannot have any new fossil fuel investments. The UN Secretary General, Mr. Antonio Guterres, has said that the business models of fossil fuel industries are incompatible with human survival. He has also repeatedly said that any new investments in fossil fuels would be moral and economic madness. So we know that we are not doing well, our countries are not doing well in addressing the climate crisis. So I think what will make this COP truly a success, it would be allowing a just and equitable phase out of fossil fuels and a just and equitable phase-in of renewables.
Really quickly, Vanessa, that timeline, phase out, in your mind, what does that look like?
Well, I think when it comes to a phase out, there is a target of when this should be done. And for many people, they think that the movement is calling for, a one shutdown of the economy. We know that that is impossible. We know that that would be catastrophic for communities, for people that work in the fossil fuel industry. And that is why we call for a just transition. A just transition means that we shouldn't have any new fossil fuel investments, and we should start investing in renewables. And as we invest in renewables, we start to train people, to be able to adapt to the new jobs so that those that are working in the fossil fuel industry are not left behind.
Right, and that's a lot of the conversation that we're hearing from a number of African countries, including in South Africa. Vanessa, we have to leave it there. Really appreciate your time. That's Vanessa Nakate. She is a climate activist and UNICEF Goodwill Ambassador. Anna?
Jen, thanks so much. Bloomberg's Jennifer Sabasaja on the ground for us at the COP28 events in Dubai. And coming up from there, we'll be speaking to the CEO of the environmental services giant that is Veolia. That conversation coming up shortly. Estelle Brachlianoff joining us. Don't miss that interview live from the COP28 Climate Summit in Dubai. That's next. This is Bloomberg.
On which our shared future depends. After all, ladies and gentlemen, in 2050, our grandchildren won't be asking what we said. They will be living with the consequences of what we did or didn't do. So if we act together to safeguard our precious...
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back, 8:44 here in London. We're still bringing you live images coming to us from the COP28 event taking place in Dubai, of course. We're currently seeing Luiz Inácio Lula da Silva, of course, the president of Brazil, speaking to those assembled. He's actually been on the domestic front trying to pass some legislation that would have gone down well in the room at COP28. Some of that went his way. Some of that did not go his way ahead of these events. We've also been hearing, of course, from Antonio Guterres at the UN, urging fossil fuels to be wound down, to come to an end. And we will now listen in a little to what the Brazilian president is saying.
This time, we will have to pay for the price. Now, the planet is not waiting anymore to demand from the next generation. The planet is tired of climate agreements that were not fulfilled and goals to reduce neglected carbon emissions. And the financing to the poor punches never comes. Eloquent and empty speeches. We need concrete actions. How many world leaders, in fact, are committed to save the planet? Only last year, the world had spent more than $2 trillion in weapons, amounts that could be invested to fight hunger and to confront the climate change issue. How many tons of carbon was were emitted by missiles that cruise over the skies and fall over innocent civilians, mainly children that are hungry? The count that has to be paid for the climate change is not the same for all. And the first one to pay for the price is the poorest population. The 1% richest part of the planet emits the same volume of carbon than 66% of the population. Rural workers that have their plantations, subsistence plantation devastated by drought, cannot feed any more their families. Dwellers in the peripheries of the big cities that lose a little bit what they have when the floods come and destroys everything: furniture, homes, pets, and their sons. The injustice that penalizes the younger generation is only one of the faces of the inequalities that affect us. The world naturalized the disparities that are unacceptable in terms of income, gender, and race. I can't imagine to confront the climate change without fighting inequalities. Who are those that are in hunger have their existence imprisoned by the pain in the present and becomes incapable to think about the future, about tomorrow. To reduce socioeconomic vulnerability means to build resilience vis-a-vis the extreme events. It also means that we should have the conditions to redirect all the endeavors to fight global warming. In 2009, when I participated in the COP15 in Copenhagen.
The Brazilian president there, Lula da Silva, of course, speaking about inequality as well as the climate agenda and the linkages between the two. Now, the first global climate report card will be published at COP28, providing an update on progress towards the Paris Agreement. And ahead of that report, there's been an early breakthrough. Nearly 200 countries have agreed on how to run a fund to help vulnerable countries deal with more extreme weather. We were just hearing comments from one of our guests about how they didn't think that this number was big enough, but rich countries have pledged to at least $260 million to start that program. Ahead of COP, Bloomberg spoke to South Africa's Environment Minister and co-lead of the Global Stocktake, Barbara Creasy, about her hopes and expectations.
loss and damage fund. But loss and damage, in a way, is the last alternative. It's far better to build climate resilience in developing countries, and therefore we need new and predictable sources of finance to build climate resilience and, of course, also to help those countries such as ourselves that are big emitters to deal with our mitigation challenges.
Well, and you actually co-chair the first global stock take, right? Which is part of the job is to see where the Paris Agreement goals are actually at. When we think about a number of the goals that were reached in 2015 and the discussions that you've had since being appointed to this, are we that far behind as the UAE, as the COP28 president suggests?
Well, I think our knowledge is based on the technical report that we've obviously seen. And the technical report tells us that, yes, the Paris Agreement has helped, but we are not on track as a world to meet the global average temperature increase of 1.5, which science tells us is necessary if we want to avoid the worst effects of climate change. Of course, obviously, even in a 1.5 degree world, there will be severe effects and implications of climate change.
So then what have your conversations been over the past few months, given this role that you're in?
Well, I think that what we have to do is we've got to formulate what will be the political report. And there is broad agreement amongst countries that the report must be backward-looking. How far have we come? It must be forward-looking. How will it help to guide future indices?
At the end of COP28, is that what you're talking about, the report?
Yes.
Okay.
Yes, because 2024 is when countries will be expected to submit revised indices to the UNFCCC. Of course, what's also broadly agreed is that the report has to reflect on the best available science, and it has to reflect issues of equity. I think that outside of that, there would be still fairly big gaps between what countries believe we should be looking at as to why historical targets have not been met, and how much granular detail you would want to go into for your advice on the future nature of nationally determined contributions. So that is really where the conversation is at the moment that Minister Jorgensen and myself are facilitating.
That was the South African Environment Minister and co-lead of the United Nations Climate Change Conference's first global stocktake, Barbara Creasy, speaking to our colleague Jennifer Sabasaja ahead of the COP28 events. Now, we'll be back to that theme throughout the day, of course, but coming up, we'll get back to the markets. Traders bring forward bets on ECB rate cuts this week after data showing inflation falling across the euro area faster than expected. We just got the manufacturing numbers from Italy. This is the PMI data coming in weaker than expected, weaker than the prior period. We'll roll that into our next conversation around the European Central Bank. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Markets Today, 54 minutes into our European trading day and making some decent gains across many of these European markets. Let's talk rates policy. ECB officials have been insisting interest rates need to stay high for the time being. However, another stark slowdown in euro area inflation suggests the economic picture is changing faster than expected. It's prompted investors to ramp up ECB rate cut bets, with some forecasting earlier and deeper cuts by the central bank. Let's get more from Zoe Schneeweiss, who leads our Western European economy coverage from Frankfurt. Zoe, great to speak to you this morning. So why are these rate cut expectations shifting now? We're all glued to the PMI data, but the growth data and inflation data this week.
Yes, the inflation data is the one that really gave them the push here. We all have been seeing over the past months that inflation prints have been coming closer and closer to 2%. However, the one that we got yesterday, we saw that headline inflation hit 2.4% in the euro area in November, and that was just a better reading than a single economist in a quite big poll we did had expected. Before that, we had a huge undershoot in Germany. Spain was expected to accelerate, instead slowed. France was expected to slow a bit, slowed much more. So that just giving markets confidence that the ECB will need to start cutting rates much earlier than it is in any way indicating.
Yes, and just looking at some data out of Germany now, 42.6 on that manufacturing PMI, so just a shade above the survey and the prior, in line with France, where we saw something similar, but the Italian number disappointing. Just briefly then, Zoe, we've seen Goldman Sachs just changing its view on the ECB. What's the story?
So Goldman Sachs was expecting rate cuts in the third quarter of 2024, and now they've brought that forward to the second quarter. So that's more in line with market expectations. And the reason Goldman is giving for this is, on one hand, the inflation prints we got, but more importantly, they highlight the fiscal situation in Germany, that this will be a provider drag, and also that the labor market, which, as we know, has been incredibly robust throughout the euro area, that they're actually seeing a slowdown there, and that those three elements together will just be the reason for the ECB to have to cut earlier than it is, than policymakers are expecting. Just as a reminder, policymakers right now are saying, the hawkish ones are saying it's too early to discuss it all.
Oh, right. Zoe, thanks very much. Yeah, we're hearing similar messaging, aren't we, from other central banks as well. Thanks so much to Zoe Schneeweiss in Frankfurt. That is it for markets today. The Pulse is up next. They'll continue to keep across these markets and developments at COP28. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Dubai today with special coverage this hour from COP28. A lot going on. It is the 28th UN conference, of course, on climate change. Now, we have a great stellar lineup of many, many guests that will join us this hour. We already had some kind of deal yesterday that puts everyone in a really good place. Now, we'll bring you interviews from COP, including with the chief executive of AstraZeneca. Coming up, we also have the NG chief executive. Then we'll talk to the Prime Minister of Greece and the President of Sri Lanka. So this is what we know so far in terms of what the agenda has been laid out. A part of 70,000 politicians, diplomats, campaigners, financiers, and business leaders are here in Dubai from COP28. The Brazilian President Lula da Silva has just addressed the summit. We also heard Saudi Crown Prince Mohammed bin Salman, the German Chancellor Olaf Scholz are all among those coming today. Now, the hosts, the UAE, have also announced a commitment of $30 billion to help finance climate solutions. So COP28 has already scored yesterday an early win. Nearly 200 nations agreed on how to run a fund to help vulnerable countries deal with more extreme weather. Rich nations pledged at least $260 million to kickstart the program. That comes one day after the United Nations actually declared 2023 the hottest year on record. Well, joining us now to talk about energy is Catherine McGregor, Chief Executive of the French utility giant ENGIE. Thank you, Catherine, for coming on the program. I know you always give great interviews and trying to understand what money needs to actually make a difference, where it needs to go, and some of the capital flows that you're seeing. Are you optimistic about COP28?
I am optimistic by nature, Francine, and hello everyone. Nice to be here. Thank you for having me. I am optimistic. I think already there was some positive dynamics at the beginning, which is good. It bodes well, I hope, for the rest of the discussion. I think if you look at the energy sector, there are talks about ambition to tripling the renewables energy by 2030, which is tomorrow. So that's good, to double the energy efficiency. So again, this, I think, bodes well, and this looked to me that promising commitments that we could get from the COP28.
Catherine, I can see the concern is fossil fuel, right? The fact that we're not reducing it enough. If you read the IRA report, it's something that's been done. Are you worried that here at COP there's also a president that has come under a lot of fire and, frankly, a scandal because apparently he has been maybe pushing some of the fossil fuel contracts to leaders that he was meant to meet with COP?
What I'm hearing and what I want to focus on, obviously, is the fact that there is huge momentum and strong dynamics to build the low-carbon energy system of tomorrow. And for this, you're going to need, Francine, massive renewable development, which seems to be a good commitment, and there is good dynamics behind that. You're going to need also, obviously, flexibility assets, because renewables tend to be intermittent. And what I think we have to focus on, not just green electrons when there is nice weather, or when there is sun, or when there is wind, but also ability to store the energy and to dispatch it when people actually need it. So here you need storage solutions. That's why I'm always pushing the battery theme, which is very important to complement the energy. And then lastly, the molecules. Gas, today is fossil gas, needs to be part of the system of tomorrow, because it's a very nice complement to the electrons. Of course, it needs to be low carbon gas. And so here, excitement around everything we can do on biomethane, hydrogen, and derivatives of hydrogen to help make sure that this energy mix gets developed in the right way, in order for the energy system to be not just low carbon, but also very important, resilient and affordable. I'm sure we'll talk about the social aspect of the energy transition. It's so important to keep the affordability in mind. And so back to your questions, it's for me what is very important is that we focus investment efforts, business and private sector, to build this new energy system, because it's very difficult to let go of the old system if you don't have a new system that works for everybody. And I believe that what I'm hearing from the COP is along those lines.
But tell me a little bit about green hydrogen. We spoke about it in the past, and I guess the Inflation Reduction Act has done wonders in trying to get the price down. Is there a price that you're looking at for escape velocity, where a lot of these renewables will be, I guess, being able to adopt much more widely?
Yeah. So green hydrogen is indeed super exciting, because it's going to be the versatile molecule that is going to respond to a lot of the challenges, the transport, heavy transport, right? The industries that are hard to abate, and also can provide storage solutions for the green electrons that hopefully we will have plenty of. So it is indeed part of the solution. What I think is true is that we have been a little bit disappointed on the pace of the development of the market. I think you have to understand that a lot needs to happen for this market to indeed mature to the level we need. You need regulation. You need a lot of green electrons, a lot. And you also need the infrastructure. And we are working on all of those aspects. When I say we, it's everyone. On the energy side, a lot on the infrastructure. So, we are testing, for example, storage cavities that today are used to store natural gas, and we're trying to convert them to hydrogen. We're testing some of that pipeline. We're also involved in a very nice project between Spain, France, maybe Germany, to transport green hydrogen. So a lot going on, but indeed, I think it's fair to say that it's taking a little bit longer to mature, which is why when we talk about green molecules, you always have to think you have today commercial solution, like biomethane, which is today, and it's the same molecule as natural gas. So it's really a one-for-one replacement. And that's exciting to see, certain countries recognizing the potential of this molecule, and obviously ENGIE is very active in going after it.
Are you doing anything specifically in the Middle East? Is ENGIE looking at opportunities here?
So ENGIE, we have a historical presence here in the Gulf, in the region. We have a big power producer, but also a water producer. People don't know that, but it was part of our power production presence. And today, as we've done with the rest of the group, we are obviously pivoting our focus, and we are investing indeed in district cooling solutions, and we have a great partner in Abu Dhabi. So district cooling is a way to provide cooling solution in a very efficient manner. So that's one focus areas for us here. And also, of course, green molecules. So we have hydrogen project under development. And lastly, and hopefully, we will do renewables in a couple of countries, Saudi and Abu Dhabi, hopefully as well. So yes, very much important region for us.
Catherine, when you look at a lot of the things that actually you're expecting at COP, what are you? I know we started the conversation with saying you're optimistic, but you're also optimistic by nature. Is there something within the next 6 days that you would like to be signed? Is it something on fossil fuel? Is it something on loss and damage that would make a difference to your world when you speak to investors?
Yeah, I think loss and damage is an example where I think as a citizen, I hope that we can move and make some agreement. I think on the energy sector, I think for sure having a very strong ambition on what we want to do on renewables, on infrastructure. And I didn't talk so much about transmissions and power network, which is very much a key enabler, which is crucial. So we need all that. So that's also very important. And I think to your question on fossil fuel, I think we can't leave it out of the debate. And I think at some point, to be consistent with a net zero, it will have to be on the agenda, potentially with a calendar. And I won't play with the words phase out, phase down. I think you need a phase down before you have a phase out and a calendar. However, you don't want to create a shock to the system because affordability and just transition has to be part of the equation. And I hope that the leaders can figure it out. It's not an easy one to solve.
Is it much harder with interest rates at 5-6% overall? Because a lot of the projects have to be financed with debt.
Interest rates have indeed, given a bit more challenges to all of us developers, made, the hurdle rates and the expectation for our projects to be economic a little bit higher. But we're finding solutions. Obviously, that's what we do as companies. We're finding solutions to these challenges, and we continue to do renewable projects in an economic way. Without economic sustainability, we don't have sustainability. So I'm very, very focused, in my job to make sure that we do renewables, we do this energy transition in a way that makes sense from an economic standpoint. And despite high interest rates, which has put a challenge onto us for sure, we continue to find projects. There is obviously customers that are very keen to secure their energy, green electrons, and to have also the visibility on a longer term. And so that helps us de-risk the project and continue to find good projects to deliver, which is exciting.
It is exciting. Thank you so much for being here with us today. That was the ENGIE Chief Executive Officer, Catherine McGregor. Now, we'll have plenty more, of course, throughout the day. Plenty coming up at the UN Climate Conference here in Dubai. This is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in Dubai. Today we're from COP28, so there's quite a lot, of course, going on. Now, this is one of the couple of things that we're looking for. We look at loss and damage. Now, we did have a little bit of a win yesterday. I am delighted. I think we're joined by the Chief Executive Officer of Veolia. She's Estelle Brakianov, and she's with me. Estelle, I don't know if we can hear you. I think we can hear you. We're just checking.
Hopefully we can.
I think we can. Can we hear our guest? I think we can hear her. Great. There you go. Thank you for joining us. Let's talk about plastics. When you look at some of the hopes here and some of the concerns that we have in general, what can be achieved? I mean, your world is one of recycling, of trying to do some good, but are you getting enough support from leaders?
I guess, you know, the reason why I'm here and why we have other chief exec is like business can be a force for good as well. And the solution lies in hybrid partnership, if you want, between private and public. And, you know, bringing the solution providers together to try to scale up and speed up is exactly what it is about. So you can see the glass half full or half empty, but I think a lot is moving on. And we need to speed up in terms of plastic recycling, as well as water preservation, which, as you know, is one of the main consequences of global warming. It is the mitigation, but the adaptation element is about water. So solution provider being brought together and PPP is absolutely critical here.
But do you think something, you know, concretely will be signed? I don't know if it's extra money being poured into helping your industry also arrive into countries that need it most, so that a solution can be circular and therefore better for the planet.
For me, the big hope is about method that we will set together. We, meaning, you know, the global leaders today at Dubai, a target and an ambition and a trajectory to reduce methane emission. Veolia is a solution provider into that, but, you know, I think it's a super critical element which can be achieved, hopefully, at the COP.
Talk to me a little bit about, I guess, you know, there has undeniably been a backstep in some pledges, and I don't know whether this is because of the cost of money. We're also dealing with 2 wars. A lot of companies, a lot of investors maybe want to put their money elsewhere and are a little bit more cautious. Do you feel, when you speak to investors, when you look at, you know, starting on some projects, do you still feel a little bit of hesitation?
I guess if the initial reason why you're doing something about the environment is just because you feel like there is an external pressure, then maybe there could be a bit of going down at one point if you feel a bit less pressure. But if you feel, and I think it's the case of many, many companies, that the reason why you're doing that is because it's good for the business and it's a more high brand as well, then I still have a lot of customers who are asking for solutions now, and irrespective of the global crisis you've mentioned. And I would say it ticks a lot of boxes because it could be, you know, adaptation and mitigation can be a way for business to be more resilient, to be more locally sourced and not depending on, you know, like worldwide supply chain, as well as to create job and growth in our economies. So I guess it can be going together. Yeah. And if I go the next step, sovereignty. Yeah. If you're talking about finding, you know, local sources of energy or recycling, it gets you more independent from the rest of the world. So I think, you know, all the various objectives can go together into ecological transformation, which is, you know, paramount.
Estelle, thank you so much for joining us. That was the Veolia Chief Executive Officer, Estelle Braclianoff. Now, we'll have plenty more, of course, from COP here coming up. Also, a conversation on healthcare, an exclusive interview with the AstraZeneca Chief Executive Officer. He's Pascal Soriot, as we continue our coverage of day 2 of COP28 here in Dubai. This is Bloomberg.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome back to our special coverage from COP28. I am delighted now to talk a little bit about healthcare. We've talked about energy. We've also talked about recycling, but now we're joined by the AstraZeneca Chief Executive for an exclusive conversation. He's Pascal Soriot. Pascal, thank you for joining us. I don't know whether there will be big announcements. We're expecting quite a lot actually from AstraZeneca in terms of decarbonization, in terms of, I guess, pledges from the healthcare system.
Yes, it's great to be here, Francine, as always. Yeah, big announcements, actually. We have made a number of announcements over time. We work together as an industry to reduce the carbon emissions. It's important to remember the healthcare sector as a whole generates 5% of global carbon emissions, up to 8% in some developed countries. And everybody is working hard. As a company, since 2015, even though the company doubled in size, we've reduced our emissions by 60%. Also reduce water by 20%, waste by 20%.
This is how, Pascal, is it in the packaging, is it in actually sourcing more locally, or is it in water usage?
It's really, first of all, reducing energy consumption as much as we can in every site. It's moving to biogas, for instance, in the UK and in the US. We have 9 manufacturing plants in the US. We're moving to biogas instead of fossil gas. It's moving to wind farms in Sweden, in China. It's transitioning our car fleet to EV cars. It's all of those things. Using green energy for our sites. All sorts of initiatives across the company to reduce carbon emissions.
Is it easier to do it in the U.S. because of the Inflation Reduction Act and some of the innovation that's going on in the country?
Yeah, actually, we're able to do it everywhere. In the U.S., of course, the IRA is a big incentive for everybody to do it. But in Europe, we all know, European commissions and the countries, they want to decarbonize. The UK has a big agenda, and the UK has done a lot in the carbon agenda. We, are really reducing everywhere we can, and it's a big job that everybody is working towards, and the industry has committed to work together. We just announced a big investment, a collaborative investment across a number of companies in China and India to source green energy for ourselves and our suppliers, and it will produce 70 megawatts of electricity, reduce carbon emissions by 120,000 tons of carbon, the equivalent of 25,000 cars taken off the road.
Well, how confident, and you mentioned the UK, and there was debate on whether some of their green energy policies were green enough or whether there was a retrenchment. But how's it going in the UK?
It's actually going well, I think, overall. Of course, all of us would like to move faster than we do collectively, but I think it's moving in the right direction. The government has the right policy in place. We also have to give ourselves a bit of time in some cases, of course, for this transition.
But I think overall the UK, in terms of carbon emissions per capita, is in a good place and moving in the right direction. We also, as a company, are investing $400 million in moving our propellant to a carbon-free propellant for asthma and COPD medicines. So we're doing all sorts of things, really, to reduce carbon emissions across the entire sector.
Now, I want to talk a little bit about, away, I guess, from COP28, some of the hot ticket in town, since we got over COVID, presumably for the moment, is, of course, some of the obesity drugs. What are plans for AstraZeneca for that market?
Yes, there's a big unmet need, of course. People need to lose weight. They also need to gain muscle mass. It's important to have muscles because it drives your insulin sensitivity, reduces the risk of hypertension, diabetes, etc., kidney disease, etc. On our side, we are working on oral, the so-called oral GLP-1, similar to the product that are injected, because we believe that if you really want to bring this product to many, many people, the oral route is going to be a good one. We're also working on other type of weight loss drugs that will help people lose more fat and less muscle, protect the muscle and lose the so-called white fat, which is the big problem.
But if you look, for example, at your RSV shots, there's so much demand. How much is it or how much can you increase supply by?
Yeah, so here we're talking about RSV, which is a virus that is affecting adults, but in our case, babies, newborns. So we have an antibody that is protecting babies for 6 months, and then they are out of the woods, if you want. And the demand has exploded because there is a big RSV epidemic in many countries. But we are able to cope. We have increased manufacturing capacity. We're working very closely with our partner Sanofi to bring this product to as many babies as possible. There's been a large demand in France, a large demand in the US and other countries, Spain and many others. But we are able to cope overall.
It's not available yet in the UK. Will it be?
Well, in the UK, we basically are waiting for NHS and NICE to reimburse it and order it. But we can only supply when we get an order, of course. Yeah.
Okay, thank you so much for joining us. As always, that was Pascal Soriot, the AstraZeneca Chief Executive Officer. Now, we'll have plenty more from Dubai here at COP28. I have to say, it's pretty incredible when you walk the corridors. There's floods and floods of people trying to get to where they need to be. A lot of the focus is on loss and damage. A lot of the finance will be, of course, the focus will be on finance later in the day, where we're expecting also possibly some big announcement from asset managers on actually putting capital flows to where they need to be. Coming up, we'll be joined by the president of Sri Lanka, also for a good conversation and an exclusive one on what more can be done for some of these economies. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself
Self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
This is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Dubai for COP28. Now, we've had a number of conversations, of course, on the need for greening the economy, on what some of these private companies can do. Joining me now for an exclusive conversation is Ranil Wickremesinghe, the President of Sri Lanka. Mr. President, thank you for giving us a little bit of your very busy schedule to try and understand the complexities of greening an economy that's also has issues in trying to grow. So first of all, what are some of your green initiatives?
Well, our greening initiatives will start with encouragement of the renewable energy. Sri Lanka has, I think, we will have about 100 gigawatts finally of solar wind power available, which is far more than our needs. So it's a question of investing, and the investors will be able to at some stage export it, either in the form of green hydrogen or into India. We are having energy connectivity with India. So this is just a start.
And Mr. President, is it easy to find that capital? Are investors happy to come into Sri Lanka and give you some of what's needed?
Yes, once we start, which we have already done with 2 or 3 investors we are negotiating, other will come in. I think there is hunger for good investments, and especially a country like Sri Lanka, where we'll have excess energy available.
Is this because there are opportunities of a good return, or is this just because it's the right thing to do? Like, what do you tell investors who are thinking about coming?
Investors will not come to do the right thing. They are coming because they think there's a good return. Up for them to judge. We want to open up the sector.
How big do you want it to be? So you mentioned a couple of things, also looking at exporting possibly to some of your neighborhood. How quickly could that come, that you're doing so much green energy?
It will take a bit of time. The connectivity has to be, we have to start the connectivity. We just agreed on it a few months ago. And in India will have a big demand. I mean, there's already Bangladesh, Bhutan, and Nepal are connected to India. So that's one. But then we find we will have sufficient even for other purposes.
Sri Lanka also has its economic challenges. So by getting green investment, could that propel actually GDP and also labor?
It will certainly help us with the GDP, but it's a commitment that we get to 1.5 degrees Celsius. Actually, Sri Lanka is also planning to speed up its net zero campaign from 2050 to 2040.
Mr. President, how are the conversations going here at COP28? There was an agreement yesterday in terms of some of the things. It was unexpected because at other COPs there's always been infighting. Is there a willingness of leaders to come together?
Well, we have to show the willingness. We haven't had that many agreements, but this fortnight is crucial. We've got to show the world that we can deliver. That's the question, because there are too many disagreements among us. I don't see the need for that, because if we all go along with the IPCC recommendations, then the differences can be only in the means of implementing, not on the policy to be followed.
But what does success look like to you? Is it money actually being pledged in the right places, or is it agreements on cutting gas emissions? It could be fossil fuels. Is it pledges
or
money?
There
is
no agreement on fossil fuel, and there are no pledges on the table either.
But should there be?
There should be at least a commitment. No one is sort of even willing to enter into a commitment, so as the loss and damage fund report showed.
But is it a worry that actually the president of COP comes from big oil, with reports that he was also trying to get funds for advancing fossil fuel interest whilst being in charge of COP?
No, when we selected UAE, we knew that UAE is a petroleum exporting, gas exporting country. So then whoever comes from UAE has to be connected. UAE hasn't got, they don't cultivate tea, so that's the outcome of it.
But do you think still enough can be done?
Well, yes, I think on this matter enough can be done. Let the UAE, because you have to have a decision. Either if you don't want countries that are involved in the oil industry, then don't have them. But if you want them to share it, then you have to accept the fact that they are not going to shut down their fossil fuel today to accommodate the COP28, but then you have to get them in and discuss with them too.
Okay, Mr. President, thank you so much for joining us. That was, of course, Ranil Wickremesinghe, the President of Sri Lanka. We'll have plenty more heads of state right here joining us on set, the Bloomberg set at COP28. We're joined shortly by Kyriakos Mitsotakis, the Prime Minister of Greece, for an exclusive conversation as well. That's coming up shortly, and this is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
The top names in global leadership are on Bloomberg.
What we've just delivered are significant tax cuts. For business, we will be the only major G7 economy, certainly, and even broader than that, where you get a total write-off against your taxes for capital investment. And it comes on top of the fact that our corporation tax rate here is lower than any other G7 economy. That's an incredibly generous regime to attract business investment.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in Dubai from COP28. Now, we're joined exclusively by Kyriakos Mitsotakis, the Prime Minister of Greece. Prime Minister, thank you for joining us. I mean, it's been quite a week for you, I have to say, and the UK. The Prime Minister of the UK, Rishi Sunak, cancelled the meeting with you, accused you of grandstanding, and ruled out allowing some Pantheon sculptures to leave the British Museum. You seem to have a cordial meeting with his opposition.
Francine, in the spirit of long-standing good relations our two countries have, and which I certainly intend to preserve, I don't have much to add to this topic, nor do I want to get embroiled in domestic UK politics. I think we've said everything we have to say about this issue, and I really don't want to comment more about it.
Have you spoken to the Prime Minister? Do you feel like it's now behind you?
Well, I would certainly want to leave this unfortunate incident behind me, but it always takes two to tango.
Have you spoken to him?
No.
Okay, maybe you'll get a call, maybe after this interview. Prime Minister, there's a lot to be done here at COP28. Are you confident that there's going to be something meaningful instead of just talk?
Well, this is an important COP. It's a stock-taking COP. I think there is a very understandable concern about the track we are on and about the gap between our nationally defined contributions and where we need to get to. And coming from a country which suffered the devastating consequences of the climate crisis this summer, I cannot just but urge everyone to be more ambitious in their goals. Greece has done its own fair share of the heavy lifting. We have reduced our emissions by 43% since 2005. That is the fastest reduction of emissions of any European country. Granted, we also had an economic crisis to deal with, but we still remain fully committed towards meeting our mitigation targets, but obviously we can't do it alone.
I mean, you also have growth, which helps if you have money to spend on this. So what kind of advice do you give? I mean, there are leaders here, and without maybe giving advice, like what's the biggest challenge right now to a leader that wants to do good but that can't quite get there?
Well, listen, we have to set long-term targets and medium-term targets. I think decarbonizing our power sector is the obvious way to go in terms of increasing the penetration of renewables. This is something we've done in Greece. We're a top 10 producer of renewables globally, and we intend to continue down that path. But we also need more investments in our grids in order to actually make renewables work. So this will be the #1 priority. And then, of course, obvious energy savings, looking at our houses and how we can achieve quick wins through positive NPV measures.
Prime Minister, what do you worry about the most right here in Europe right now? There was a pretty shocking election in the Netherlands that not many people are expecting with the far right to win. Does this change also commitment to greening the economy?
Well, look, we are committed to the Fit for 55 agenda, and important legislative initiatives have been passed. At the same time, we need to listen to our people and understand that we cannot place more burden on the less privileged ones. And that is why the total, let's say, rebalancing of our fiscal approach, making sure that we use the process of growth to support the more vulnerable households is so important in our case, and to make sure that a lot of people can actually tangibly benefit from the green transition. For example, in Greece we have an extensive penetration of thermal solar. You just heat our water using the solar energy, and it's a very cheap measure that helps reduce electricity bills. So make sure that we focus on those measures where we can actually demonstrate to people that we take care of their concerns and we don't put unnecessary burden on them.
But overall, do you worry that there's a tilt, that there's more domestic uncertainty in a lot of big European countries?
I'd say yes and no, but you look at other countries, you look at Poland, you look at Greece, for example, reasonable, moderate, centre-right.
You got elected in the summer.
Government with a strong majority, a very strong mandate to deliver growth rate way higher than the Eurozone average. These are all good signals. You can actually run a moderate center-right government, obtain a large majority, as long as you continue to deliver benefits for citizens.
Do you worry, Prime Minister? I'm talking a lot about worries because it sees that the economy overall, the world is not getting easier to deal with. We talk about onshoring. We talk, for example, about a lot of the green technologies coming back to the U.S. We talk about the rift between U.S. and China. If you look at these big issues, what do they mean for Europe?
Well, Europe has an important role to play in terms of carving out its own agenda regarding its own strategic autonomy. We are leaders in the climate change, but we can't do it alone. And certainly we don't want to put European businesses at a disadvantage compared to the US or to Chinese businesses. Look at shipping, for example. We want to decarbonize shipping, but shipping is a global industry, and we want to make sure that our shipping is not placed in a position where you would just have, ship owners move their flags to other countries.
But so how do you do that? Again, it's extremely difficult. And if you look at shipping, I mean, it takes a huge amount of capital at a time where interest rates are high to either rebuild or actually repurpose a lot of these shipping deals.
Well, you do it by offering the right incentives and by making sure that you spread the burden equally on everyone. Not an easy exercise. You need to use technology and to make sure that we're at the forefront of the technological innovation. But we certainly want to get to that point.
Prime Minister, Greece is actually aiming to be an exporter of green energy to Central and Southeast Europe as more renewable power comes online. At the same time, you're also looking at hydrocarbon exploration. How do you marry the two?
We need baseload power. We need natural gas for the foreseeable future. But at the same time, we can significantly expand our green production capacity, which is something we intend to do. We want to be an exporter of green power in the medium to long term. In the short term, we want to make sure that we cover the requirements of our neighboring countries in terms of offering them access to natural gas, which is something that we do through significant investment in our infrastructure.
So do you think you can help them meet some of their priorities?
We are doing that already. We're doing that already by covering the needs of Bulgaria. We're exporting gas to Moldova, and we're building the necessary infrastructure to import gas into Europe through northern Greece. So we want to be a provider of energy security for many European countries.
How long, Prime Minister, will it take for that infrastructure actually to be put in place?
The FSRU is arriving in Alexandroupolis in a month. So the first infrastructure is already in place.
If there's one thing that you think COP leaders need to get right in the next 2 weeks, what is it?
To make sure that we ramp up our ambitions. What we're doing is not enough. We're paying the consequences, and we need to send out a signal of extreme urgency out of this meeting.
But this is what, pledges on methane? Are there concrete pledges?
Methane power production in the short term, and of course climate financing for those who need it the most.
Prime Minister, thank you so much for joining us. That was Kyriakos Mitsotakis, the Prime Minister of Greece. Now, coming up, we'll talk a little bit about the European Union, of course, some of their pledges, greening the economy. We'll be speaking to Maros Sefcovic. He's the Executive Vice President for the Green Deal at the European Commission. He'll be joining us live here from Dubai. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in Dubai from COP28. Now let's bring in Maros Sefcovic. He's Executive Vice President for the Green Deal at the European Commission. Thank you so much for joining us. There's so much going on here at COP, and frankly, one of the main questions that we have is what kind of language will we end up with on fossil fuel, which is, I guess, the biggest point of tension, given we're here, the UAE, a big fossil fuel provider.
I think it's quite clear that from the European Union there will be a clear message that we are doing our utmost to reduce greenhouse gas emissions in Europe. So we'll do our task and we'll be minus 57% by 2030. But we are responsible only for 7% of the greenhouse gas emission in the world. So we need to tackle this remaining 93%. And I think we can do it only in the way if we would proceed with the phasing out of the fossil fuels. I know that it's a big topic for the discussions. So I think that will be all kinds of new technology. But I think for us, the ambition is very clear. We will be climate neutral continent in 2050, and we hope the rest of the world will join us very, very quickly.
But will there be, if not a concrete pledge, something concretely from this region that's so needed if you look at the IEA report on fossil fuels?
I think that in all, discussions so far, also this region was constructively looking at different options. I don't know if we'll make it, I would say, to that final frontier because from the perspective of the Paris Agreement, this is the most important COP since Paris, and I think that this global stocktake and the fact that clearly we are off mark where we wanted to be by this time, because this year was the hottest we had since we started to measure the temperature. A few times we made it over 1.5 degrees Celsius. So I think there's enough evidence that we have to go in that direction. And of course, we hope for constructive cooperation with all partners, including our hosts and of course everyone from this region.
How much will the EU contribute to loss and damage?
First and foremost, we've been at the birth of this idea in Sharm el-Sheikh, and we've been, of course, very happy that we have a deal, that this would be the pledges coming from different member states. But I think as a Team Europe, we will be well over 220 million. I would say at least, because this is still, I would say, the process. We are at the beginning. But I think as we did and honored our commitment if it comes to climate finance, where Europe contributed in 2022 more than $30 billion in public finances and more than 12 billion in private. Also in loss and damage will play our role. We'll be constructive partner, and I think through this Team Euro approach we are showing to the developing world that we want to do our utmost to help them.
Yeah. But so there's no fund per se, you don't have a number for loss and damage specifically yet?
I think that we know what the Europeans are ready to put on the table, and as I said, these are the first days, so I mean it was already publicly announced that at least 220 million euros, and of course our let's say outreach is also very much aimed at the countries who can afford to pledge. The big emitters, big countries like China, countries from these regions, because I think we need to broaden the base of the contributors. And at the same time, we would like to focus the use of this loss and damage fund to the least developed countries, but also to the small island states, because I think that they really need it most.
Talk to me a little bit about whether you're worried that there have been elections in Europe that have gone to extreme parties that actually don't believe in the green transition, and what that means for the implementation of the Green Deal.
I think it's true that we have lots of anxiety in Europe, and I think the primary reason for that is that we had accumulation of crises. We had COVID-19, then war in Ukraine, high energy prices, high inflation, now these terrible events unfolding in the Middle East. So the people are anxious, and they are, of course, worried about their living standards. And I think from our side, therefore, it's absolutely important to show also the ability to listen to their concerns, to explain, and to simply highlight that the problems they're facing, they are not linked with the Green Deal, but the fact that we've been kind of hooked on the Russian fossil fuels for many years, and the only way to get out of there is to move towards future and have more renewables and push the energy prices down.
But, Vice President, are you worried that actually this phenomenon will continue as people are unhappy, so that we'll elect more extremes, either to the right or to the left, and it'll make it more difficult for achieving the green goals?
Therefore, we started with so-called green dialogues, because I think that we really need to increase the interaction and communication with our citizens, simply to show the attitude that we are not only ready to provide the recipes, but we are also ready to listen to you. What are the concerns and how can we address them?
But what are the concerns? Is there a problem with climate change or ESG or green that people they feel it's far behind them? Is it because it costs too much?
No, I think that from one side there is big support for the Green Deal and tackling the climate change, because the people simply know what was happening this summer, this autumn. We never had so much devastation because of the weather-related disasters. I think that that anxiety, which is demonstrated by many people, is more or less linked with the cost of living, with the worries how this would affect the households, and therefore I think we have to show more empathy and be in a closer interaction with our citizens to explain and to tell them, look, we are ready to adjust, we are ready to recalibrate if necessary, simply because we believe that Green Deal has to have a public support. It's there for you, and for us, it's not only the policy, but also our growth strategy.
But Vice President, I mean, I was looking at some of the numbers of investment going to the U.S. I mean, it's huge, especially for onshoring, so businesses that are pouring money back. And if you look at the graph, it's exponential. Can Europe come up with something that will give us the same amount of investment per capita?
Yeah, of course, we are discussing this with our American partners, because I think that it's such an important moment of history like now. I think it would be much better to build bridges across Atlantic, and this is what is permanently on the table with our American partners. So what, of course, we are doing, we are mobilizing every single euro we have from the European budget, and to bring more of the private capital to leverage these funds, and to be, of course, more creative how to work with our industry. So we started with so-called clean transition dialogues, where we are really working hands-on with the industry which is most affected by the green transition, and we are looking for the ways how to help them, because we want them to stay in Europe and prosper in Europe.
Vice President, in 2 seconds, you spoke to David Cameron this week. Was it about Rwanda? Did he give you any assurances about what they'll do with immigrants?
I mean, this was not the topical issue. We went through all the difficulties linked with withdrawal agreement, trade and cooperation agreement, and that was, I would say, the subject of our discussion.
Thank you so much, Vice President. That was the Executive Vice President of the European Commission's Green Deal, Maros Sefcovic. So we'll have plenty more, of course, from COP throughout the day. This is what we have coming up, some of the key conversation with leading voices. We'll have Mariam Almeri, the Minister of Climate Change and Environment in the United Arab Emirates. We also speak to Bill Gates and many, many more. Sultan Ahmed bin Salim also joins us. This is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance. Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stenivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Israel resumes war against Hamas. The week-long truce ends with Israeli jets striking Gaza. Qatar says talks for further pause in combat are still ongoing. Oil steadies after a post-OPEC decline. The alliance buys a fresh production cut, while the market remains skeptical that members will adhere to the quotas. And investors await Chair Jay Powell. Stocks mark their second best November in 40 years, gaining more than 8% on the month. A very warm welcome to the show. So we've had a monster rally in equities and a monster rally in the bond market. November delivered a fairly set of frenetic returns. You achieved nearly 5% return in the bond market. The data that came in yesterday, you had supportive PCE data, the smallest gain since March 2021. Spending dipped ever so slightly. But this bond market is almost like a naughty child. It's sort of overtired, overexerted itself by 65 basis points of a drop so far in the month of November, and the risk is today that Powell pushes back on that exuberance in the bond market. There's a wonderful saying in Ireland, go early and go often. That's in reference to voting, but for the bond market, the Bloomberg economics team have made their call. They are calling for 125 basis points of cuts from the Fed, and starting in March. So that would then put the Fed ahead of the ECB, because the ECB rates market suggests you could get a rate cut by April. Now, the crude market is prevaricating because what you've got here is really a drop of 2.5% yesterday, voluntary cuts from OPEC Plus, and that is what has underwhelmed the market. 900,000 barrels of cuts starting in January, but there's no formal quota, and therefore the market questions, can you deliver the deficit? Bit of a change in our set, a little bit of Bitcoin for you, up 8.6% in the month of November. We can smell that 40,000 breach level again. Of course, that's going to come down to getting a Bitcoin ETF. MicroStrategy, by the way, makes its biggest purchase in 2 years, Danny, on Bitcoin.
Yeah, 40,000. It's back again. Man, I can't believe it's December 1st. I have no idea where the time went, but it has been a wild November. S&P 500 futures, they're higher again this morning. They ended the month higher yesterday, despite the fact the NASDAQ, the Dow, all the other stock indices fell yesterday. But we notched the best month since July 2022. So strange in this environment, but Asia stocks decided not to join the rally. CSI 300 flipping to losses after the lunchtime break, down 0.4%, despite the fact that we saw the large China team buyers come in and buy ETFs. That initially excited the markets, but we flipped back at this moment. Alibaba also falling today after a rare downgrade from Morgan Stanley, saying that their turnaround isn't happening quick enough. It's one of the first downgrades they've received in nearly a year's time. Finally, European indices, those are starting the month higher too, up by 0.5%. Citi, for their part, says that this market could rally some 10% come 2024. But Manus, we got to talk about the November that was. Usually November is kind of a sleepy month. It's before the Santa Claus rally. You have breaks in trading for Thanksgiving in the U.S., so typically it's a very calm month. The chart I have in front of me for our radio listening audiences are just that, our November returns. This November, we just notched a nearly 9% gain. The only other time we've done that since the 1980s was in 2020. This was when we had sold off during COVID and had this big revival into the market. It was an odd time then, and man, it's perhaps easy to argue it's an odd time now. I mean, we're expecting a recession potentially for next year, be it a soft landing, whatever, and still we're having this huge rally.
Yeah, I mean, the question is then how many rate cuts do you get for next year to sustain this kind of pro-risk stance that we have? One interesting thing is that money's still absolutely cascading into money market funds. And you know, this is all to do with, well, if this is the top of rates, I want to try and capture that and put it in there for a year. 5.84 trillion in money market funds, $73 billion, the largest inflow since March. I can tell you I helped that number. I helped that number.
Good for you, Manus.
Because of the psychology. I know. It's because of the psychology. If we are at the top of dollar rates, well, why not lock it up for a year? Because I don't know where I'm going to be in a year. Do I, Danny?
None of us do, Manus. Anything can happen in a year.
Okay, let's reset. Take a breath. Because the reality has returned. Israel has resumed its combat against Hamas in Gaza. Ending a week-long truce, international mediators hope to extend to an 8th day. Here's what the U.S. Secretary of State, Antony Blinken, had to say in Tel Aviv yesterday before the fighting resumed.
Our immediate focus is working with our partners to extend the pause so that we can continue to get more hostages out of Gaza and more assistance in.
Well, Qatar, which held broker the deal of the original truce, says that the talks on a further pause in the combat are ongoing. Paul Wallace joins us from the Middle East now. Paul, what is the latest? I mean, Qatar is saying these talks are ongoing on another pause, but that's not the drumbeat from the Israeli side.
Hi, Manus. No, it's not. Israel resumed combat operations almost as soon as the 7 a.m. local time or 5 a.m. UK time deadline passed this morning for that truce. The day before, we'd got an extension only minutes ahead of the expiration. This time, it didn't come, of course, and Israeli jets almost straight away were flying over Gaza and hitting Hamas targets there. Hamas was also reported to be firing missiles at Israel once again. So we are back in the full throes of war in the Gaza Strip. As you said, Qatar, the main mediator between the two warring sides, does want to continue negotiations and does want to get to a point where we can get another pause of some kind. And then, as far as Qatar is concerned, it wants a permanent ceasefire. But we seem to be a long way off that point.
And Blinken, of course, was back in the region, too. And while he was there, he said, Israel, you can't repeat the extent of the damage that was done in the north of Gaza. How did that kind of language and tone from the U.S. impact Israeli tactics?
I think it is true that the U.S. is there is a shift in tone from the White House. They are pressing Israel much harder to make sure that civilians they're better protected in Gaza and that there are fewer casualties. Anthony Blinken was pretty blunt. He said he did not want to see the same level of casualties in southern Gaza as there have been in northern Gaza so far. One of the next phases of the war is likely to be the Israel Defense Forces moving its ground troops into the southern bit of the strip. They're pretty much concentrated in the north right now. That's what Israel says is the center of gravity for Hamas. But the next phase of the war is likely to see them move south. That's also the area of the Gaza Strip where almost all civilians have fled to. So it's got close to 2 million inhabitants there at the moment. So the US and Arab states and many others around the world are very, very concerned about what happens if Israel sends soldiers in there and it carries out fighting whilst all these civilians are around.
Whilst the horror of war is on our screens right now, the question that goes through a lot of people's minds is, how is Gaza managed, ruled when this fighting stops, when Netanyahu believes that he has achieved success in ridding Gaza of Hamas? Is there any more discussion between Blinken, the Qataris, and the Arab nations in regards to the solution?
From what we heard from Anthony Blinken's visit yesterday and this morning, it seems the answer to that is no. There's still no clear plan, either from the Israelis or the Americans or the Palestinian Authority in the West Bank or anyone else as to what happens with Gaza's governance once this is all over. It's unclear exactly when when this war is going to end or how Israel will come to the point of saying it's achieved victory. Its stated aim is to destroy Hamas and to release all the hostages. Both of those are extremely complex. And when it comes to destroying Hamas, a lot of people, even within Israel, say that's just not possible. It's a group, and even if its commanders are killed, or most of them are killed, it will continue to exist in some form.
Right. And I mean, Netanyahu himself talking about this ongoing for a year even. Paul, thank you very much. That's Bloomberg's Paul Wallace. And you can continue getting news and analysis on this story, on the terminal, and all stories we are tracking. TLIV Go is where you want to head for that. All right, Manus, let's get to some of the other top stories that we are tracking on the terminal this morning. Tiger Global's biggest venture fund had a 18% paper loss at the end of September. The firm slashed valuations from multiple portfolio companies. Bloomberg learned that the $13 billion fund marked down firms ranging from AI-powered email company to an NFT marketplace. Tiger Global, for their part, declined to comment.
The Biden administration has forced Saudi Aramco venture capital firm Prosperity 7 to sell its shares in a chip startup backed by OpenAI co-founder Sam Altman. The U.S. instructed the fund to unwind its holdings in Rain AI sometime over the past year. That's according to Bloomberg reporting.
And UK property prices rose unexpectedly for a third month in November, defying forecasts of a sharp drop this year. The country's biggest mortgage lenders say a dip in borrowing costs helped revive activity. Manus, if anyone needs a flat in the west of London, I might have something to sell them.
I think we're both long West London with various postcodes. You can go to Poshco. So. I don't know whether have you actually put yours up on Poshco? You know Poshco.
I don't want to say. I feel like I shouldn't say.
No, okay, we can't. Well, we've got two postcodes. You can IP us directly. Mine's not for sale. It's up for rent.
I love that. All right, Manus, well, coming up, we're going to talk about not just pricey houses, but a pricey stock market. We're going to be speaking to Maria Weitman of State Street.
We have indeed. Looking forward to that conversation. Later in the hour, we'll get into the weeds on the OPEC Plus decision. Caroline Bain, Chief Commodities Economist at Capital Economics, joins the team right here this Friday morning on Bloomberg.
think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything. Tuesday, a special episode of Bloomberg Surveillance live from Apollo's headquarters. Join Tom, John, and Lisa for exclusive interviews with top leaders in finance, including Apollo's Mark Rowan and Jim Zelter, about the state of private markets, recession risk in the new year, and deal-making amid high interest rates. It's all happening December 5th, starting at 6 a.m. Eastern on Bloomberg. Context changes everything.
You're watching Bloomberg Brief on this Friday morning. I'm Danny Berger in London. Manus Cranny is in New York. I almost said in November. We're certainly not in November. We are firmly in December now. And November went out with a bang, Manus. I mean, this is the best chart of the day. We got to give our hats to a producer, Assad, who put this together. Okay, because November is usually a very sleepy month, right? It's not until we get to December that we get that Santa Claus rally. But instead, what we've got is an 8.9% return on stocks on the S&P 500 since the 1980s. This has only happened one other time. Let's get now to our guest for this half hour. It is Maria Whiteman, Senior Multi-Asset Strategist at State Street. Maria, the bulls have been running. Are they exhausted now?
Well, good morning, everyone. I think that's exactly right. November was a month where this idea of soft landing really took hold. Investors really excited about it. And it became such a consensus that, strategists like ourselves can't help themselves but question, is that really the most likely scenario? And we have lots of question marks about it. Will now we're seeing slowing in data and people are excited, but would the economy slow too much and we get hard landing? Would economies not slow enough and we get no landing and central banks will have to keep rates on hold for longer? So I think it's kind of this consensus that everything is going to fall in place. Is there investors are positioned for it, and now we're beginning to question that narrative. So I think it would be more challenging for stocks to rally into the year end.
And I like that sort of hint of caution. We've sort of gone over our skis, haven't we? You know, up 8-9%. The bond market has rallied by 65 basis points. I'll tell you what Alan Blinder said. He knows a lot more than me. Soft landings are the holy grail. Of course, he was the former Fed vice chair, for anybody who's young watching, and he's now a prof at Princeton. Soft landings are the holy grail of monetary policy. He defines them in a recent paper of GDP declining by less than 1%. When you look at the scenario for 2024, markets are now pulling forward rate cuts to April and March. Bloomberg as a house is going for March for the Fed. The market's going for April for the ECB. Is the trajectory of equity markets utterly dependent on a scythe coming in on these rates markets?
Yeah, absolutely. There is an equity market rally in November, very much is a soft landing idea. So equity fundamentals have not changed. And for me, it's really, I think it's like we said, it's all things need to fall in place perfectly for that to be true. And more so because, we see equity earnings expectations are very much in soft landing camp, right? So we're seeing what like consensus is 10, 11% earnings, or small caps 15, gosh. And that's companies that really struggle with higher borrowing costs. So, I mean, those things is like market is really expecting that we get this like very sharp easing of monetary conditions and economic activity will rebound. I mean, historically, that really rarely happens. Once Fed starts hiking interest rate, and particularly equally like aggressively as we're seeing now, it's very difficult for companies to reaccelerate once they start to slow down. And mind you, we haven't really slowed down that much.
JP Morgan would agree with you. They've made a lot of the same points you have in an over-exuberant and expecting market. And because of that, they think stocks are going to fall 8% in 2024. What do you think of that? Would you say, that's reasonable, or perhaps even a correction or something bigger?
I think it's, I mean, I would probably be more skeptical than that. I mean, for us, what we look at as well, in addition to looking at earnings expectations, we can see how institutional investors are positioned in relative to their benchmarks, and they're positioned pretty aggressively. Their allocation to stocks is higher than average relative to other asset classes. Allocation to cash is not huge. Investors still overweight cyclicals over defensives. So investors really believe into the soft landing idea. So if it's not happening, there is a lot of unwind that can happen. So to us, I mean, 10-15% downside next year would be reasonable.
That's a pretty chunky call, 10 to 15% downside. Then what do you make? Square this away. You look at the amount of flow that goes into money market funds. 73 billion went in last week, 5.84, the most. We're looking at the most amount of money in money market funds since that banking debacle in the spring. If you're calling 10 to 15% drawdown in equities, where do you hide? Do you take cash? Do you take short-dated paper?
I mean, it's really interesting. So when I look what institutional investors are doing in our custodial database, they do two things. They go into cash and they go into tech. So those are two areas. So it's kind of a perfect barbell. But I have to say, I mean, tech is really, I mean, you know us, we love tech and loved it for years. But it's one area that has this almost kind of monopolistic companies that can protect their earnings, they can protect the margin. They have a pile and piles of cash on their balance sheet. So they're actually net interest expense is negative. So despite the Fed raising interest rates aggressively, they're making money on the cash balances more than they're paying in the debt financing. There is no need for, they're a lot less sensitive from the kind of balance sheet point of view to changes in economic situation. So tech and cash, that's our barbell.
Tech and cash, I love that. I do have to wonder, Maria, all that money that's gone into money market funds that Manus mentioned, a record amount, how much of that is sticky or flexible and might actually come back into this market? Only about a minute here, Maria.
Well, I struggle to see many opportunities in this market. I mean, stocks don't look too exciting for me. I mean, bonds, maybe, but then if front end give you so much money, it's to stay in cash. I mean, that's really hard hurdle.
Okay, well, that was short and sweet, Maria. Thank you very much. Some nice calls. Have a great Christmas season. We'll see you in the new year. I hope it's not a 10 to 15% drawdown, Maria. I've got a timeline now on an exit plan, and it doesn't involve another cathartic moment in equity markets. Thank you very much, Maria, weight man there of State Street. Danny, what have we got in these markets? Barbell, cash or tech? Good morning.
Yeah. I was going to say, it sounds like your retirement portfolio. I know you're moving into those cash funds. Is this market still seeing a rally higher on S&P 500 futures as we head to the end of trade, to the start of trading for the first day of the month? Little change. That dollar continues to get beaten up. We're going to hear from Fed Chair Jay Powell today. Will he continue to voice that same caution we've heard from others this week? 10-year yields dropped by a basis point. 431 is where we stand.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
It's Bloomberg Brief on a Friday morning with Manus Cranny. That's me in New York, Danny Berger in London. $60,990, not your Christmas gift. What can you get for that?
You can get well, I'd say you could get a Tesla Cybertruck, but you kind of can't even. They unveiled finally. They're offloading the Cybertrucks. The first people are buying it and driving it. But if you want one that costs under $61,000, you have to wait until 2025. The version they're giving out now, Manus, is $100,000, so a little bit more expensive.
I mean, by the way, this is now 50% more than what Musk floated and promised us back in 2019. Yeah. So, you know, the reality of getting your hands on one of these things is pretty interesting. But then we looked up the price of the F-150, and so this is $61,000 for the Tesla Cybertruck. Give me the price on the F-150.
Okay, so if you get a commercial-grade electric F-150, it's going to put you back just under $50,000. The retail model is $55,000. In other words, Manus, all of them are much cheaper than the Cybertruck. But I could say, for $100,000, you could also get me a Porsche 911, Manus. I think I'll take that over the Cybertruck.
Danny, anything you want. I'll just take you back to the 1980s. You know when these trucks first came out? I had a Grand Cherokee Jeep, and the dude in the shop said to me, "Do you want me to teach you how to use the four-wheel drive?" I said, "Why would I need four-wheel drive? I live in Kensington. I live in Fulham." I just put that thought out there. These Cybertrucks are going to be all over West London. They're going to be all over the Upper East Side, taking up a lot of space.
I love the image in my mind of Manus in his Chelsea tractor, which is
I had
actually
to sell it within
this
3
time,
months because I kept banging into things.
I love it. The mean streets of Chelsea, Manus just dominating them with his Jeep Cherokee.
Part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we could deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but where it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California in San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back to Bloomberg Brief. I'm Manestrani in New York.
And I'm Danny Berger in London. Here's what you need to know. Israel resumes war against Hamas. The week-long truce ends with Israeli jets striking Gaza. Qatar says talks for further pause in combat are still ongoing. Oil steadies after a post-OPEC decline. The Alliance vows a fresh production cut while the market remains skeptical the members will adhere to quotas. And investors await Chair Powell as stocks mark their second-best November in 40 years, gaining more than 8% in the month. Happy December, everyone. It is December 1st, so Manus can finally start singing us Christmas carols. I, for one, am thrilled, as is this equity market. U.S. stocks, at least in the futures session, are up ever so slightly higher. They were up yesterday. It's this continued exuberance, but Maria Waitman of State Street says that it's gone too far. She wouldn't be surprised to see a correction of 10 to 15% come 2024. We're too overexcited about earnings. Everything is priced to a soft landing, but will it really happen? She's not so sure. Asia stocks closing down 0.4% for the CSI 300. Initially, this index had been rallying. There's a report that the team buyer, China, came in, bought up some ETFs. That got us excited. But China stocks have really struggled to rally with the rest of this market, given some of the bad data. Alibaba not helping out either. Those shares are falling today after Morgan Stanley did a rare thing and cut their target on Alibaba, at least for the U.S. ADR, saying that the turnaround, it isn't happening quick enough. We know Jack Ma issued that memo this week talking about the need to reshape Alibaba. Finally, European stocks up 0.5%. I know we didn't get to this with Maria, but she doesn't like European stocks, Manus, but Citi, for their part, does. They say it'll rally some 10% for 2024, but of course it's cash that's kind of winning everything right now.
And that's essentially what Maria said to the two of us, which was there is this barbell approach to investing. On the left-hand side, there's cash. We saw those record amounts of money going into the cash funds, the money market funds. And on the other side, it's tech. And ironically, as rates go to 4.5%, 5%, those monster tech companies, the Mag 7, have such tremendous balance sheets that actually they're earning money on the money, which is almost a compounding of the strength of the balance sheets. I talk about a frantic equity market. It was a frenetic bond market, a 65 basis points drop in yields in the space of November. We continue that this morning. Will Powell push back at this sort of frenzied view in the bond market that not only are they at pause, but they are at full-scale pivot in the Fed, that the PCE deflator and the consumer spending yesterday were enormous another additional reason that you want to be long of these bonds. And the risk is that he does push back because the bond market has done so much of the additional work for the Fed. Crude is managing to galvanize itself. It came off yesterday by, 2.5% yesterday. There are voluntary cuts coming through from the OPEC Plus nation, and therein lies the point. That's why it dropped by 2.5% yesterday. There's a lack of belief in the veracity of the cuts and the implementation. Crude market up as 0.5% this morning. We went for a little bit of a twist. It's 1st of December. Bitcoin, it's desperately trying to smell $40,000. Will the ETF come through? That is what can imbue a new leg higher in this. The market is up 2.4%. And I can tell you this, MicroStrategy did their second biggest deal in a number of years. They're now up to $6.5 billion deep in Bitcoin. Danny, so the question is, Maria Vetman, as she says to us, that differential between cash funds and technology.
Yeah, and Manus, you might also be tempted to go into 60-40 because it had a really good month. But I have, for us, the fact of the day. This just coming in from the Flow Show of Bank of America. Michael Hartnett writing that 60-40 is up 9.6% November, the best since the USSR was dissolved in December of 1991. The issue with that, Manus, if you were to be tempted to go into 60-40, that usually these monster months are followed by pullbacks.
You see, the 80s and 90s were just the zeitgeist for everything, for music, for culture.
That's true.
You know, you just got to go back for all of your references for bonds, equities, and your birth. Oh, there you go. I think I was at university in those days. Okay, let's park the anniversaries and talk about another date in the diary, which was, of course, yesterday. It was the latest OPEC Plus meeting, and it spurred confusion, to say the least, in the oil market. The promise was this: fresh cuts. But there was a lack of detail. Caroline Bain is the chief commodities economist at Capital Economics. So the promise was additional cuts. The market lacks belief in the implementation in this because they are voluntary, and therein lies the problem, Caroline, for this oil market. Does that open a new floor in the market to $70? Good day.
Good morning. Good day. Yes, as you quite rightly said, there was a lot of confusion about what had actually been decided at the meeting. Headlines were saying a 2.2 million cuts coming in the first quarter. Having dug through the weeds a bit, what we're going to have in the first quarter, if OPEC members comply, is a 0.7 million barrel per day cut from the production in the fourth quarter. That's because Saudi Arabia is merely extending it, the 1 million barrel per day cut it already has. And Russia is also extending its 0.3 million barrel per day cut in exports. So from the market balance perspective, we're going to see 0.7 cut from supply if the OPEC members comply with what they've promised. But as you said, they were voluntary cuts.
Yeah. I mean, that's a big if, Caroline. And the bigger picture here, I mean, OPEC does want to be seen as being control of this market. Instead, what the market got was something that most people found confusing. What does that say about the credibility of OPEC Plus?
I think now that the dust has settled and we've realized what has been agreed, it's more tangible and more credible than it appeared in the immediate aftermath of the meeting. I think they mishandled the sort of publication, if you like, of the decision that had been made, which is reasonably significant in that 6 other OPEC members have decided to join up with Saudi Arabia and Russia and make voluntary cuts. And that got lost in the sort of press release where they tried to big up the amount of the cut that was coming. So a bit of a tactical mistake there, I think. But in terms of OPEC's credibility, I've actually been quite impressed that they've managed to get these other members on board.
Well, it was delayed. It was a lot of backroom dealing and cajoling. We still haven't found out where we stand with the African nations, Angola and Nigeria in totality. I know Angola have made some statements about not complying. Can I ask you, from a market construct, we have gone, you know, we've seen this backwardation drift into contango. The question is, do you think the 0.7 net cuts that you have worked out, is that enough to pivot to deficit in Q1? Because that is what the market will need to ensure a good floor.
Yes, definitely. I mean, prior to the meeting, we had assumed that Saudi Arabia and Russia would extend their cuts. That gave us a very small surplus in the first quarter of next year. However, this 0.7 extra cut means that we now slip into a very small deficit. I don't think it's particularly significant, but it does mean the market is going to be very finely tuned, closely balanced. And I do think it'll put some sort of floor under prices, even if the demand side continues to disappoint.
What does that actually look like in terms of price? Rystad, for their part, say Brent's going to trade between something $80 and $85 a barrel. What say you, Caroline?
Yeah, I mean, we've penciled in 80 for the first quarter, so we think it is going to act as a floor. But we do have prices then gradually falling next year, partly because we don't think that OPEC can indefinitely sort of cut supply like this, and there's going to be pressure for it to, it's going to start worrying about market share, and we see OPEC production gradually rising next year, which we think will lead to somewhat lower prices by the end of the year.
It's interesting that the Emiratis look as if they are doing they were given an additional quota uplift at the beginning of January. It looks as if that has been pared back. I think that speaks volumes about, as you say, the ability to bring a deal to the table by Prince Abdulaziz bin Salman. The one thing we haven't talked about, the three of us, is demand. The Saudis are set, I understand, according to the survey, the Bloomberg survey, to cut their pricing to Asia by over $1. Caroline, I mean, is that... Look, man, they are going to defend their market share come heck or high water. Is that what that kind of move is? Or does that speak to the demand structure perhaps being more challenged than we presume?
Yeah, I think there's been an awful lot said about, or concerns about demand this year, but this year we actually saw a huge rebound in China's oil consumption, mostly just the opening up after the COVID restrictions. But we're looking in the region of 10% increase in China's demand this year. I think next year is actually going to be much more challenging on the demand side, particularly in the first half of the year when the US economy looks as though it's going to be slowing. Europe is already flirting with recession, if you like. And by the second half of next year, we think that any stimulus in China will start to be withdrawn and the economy will settle at a lower growth rate. So rather ironically, I feel the main demand concerns are actually about next year rather than this year, even though there's been a focus on those this year. And that's part of the reason, again, why we expect prices to ease back next year.
Yeah, well, certainly our last guest from State Street also was very skeptical on the idea that we'd get a soft landing. Caroline, thank you so much for joining us. Caroline Bain of Capital Economics. All right, Manus, a quick check on commodities. They, of course, fell after the confusion of that OPEC Plus report. WTI this morning, let's get the read on it. It is moving ever so slightly higher, up 1/3% for both NY crude and Brent crude. The floor is in, says Caroline.
There you go, defending the floor. Speaking of which, coming up, COP28, it's under full swing. The climate talks have already scored an early win. We're live to Dubai, right here on Bloomberg.
The reception, the acceptance of Porosangue has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Porosangue all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million of cars every year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. Now, November saw an unexpected pickup in a private gauge of China's manufacturing activity. The upside surprise, though, may not be enough to ease concerns over the Chinese economy's ability to build momentum heading into 2024. Joining us now is Sofia Orta-y-Costa from our Markets Today team. Sofia, the data seems a little bit confusing, at least for me, because didn't we just have PMIs that were under 50? This one's over 50. What exactly does the data tell us about the state of the Chinese economy?
Yeah, exactly. How do you kind of read this? What does this say? So essentially, the one that we got today, that covers kind of more coastal companies, private sector companies. And the important thing to note here is that they're very export driven. So this actually tells us more about the global economy than it does about China's economy. Global demand is picking up ahead of the festive season. Global demand for Chinese goods. This is, of course, good for China because, you know, it needs that export growth that it has recently lost. But it doesn't actually tell us that demand is improving in China, and that's where the official PMI, the earlier one we got this week, really reflects weakness in growth there. So more work is needed to really revive that. Consumer confidence is still low. That's still very much the story, Danny.
This is a dangerous moment for you, Sophia. Find a fact, and that's always dangerous, which is the Caixin has outperformed the official index 6 times so far this year. There you go. Well, what does that equip us for? The debate is this. It's about the flow of money out of China. It's about whether investors are prepared to take new positions in China, reinvest in China, and believe in China as a trade. How do we dissect that when we look at markets and the reaction function there from equity to FX?
So whenever we look at the market reaction to economic data, people often ask me, why are markets not moving? And I think, Manus, the reason here is because there's so little investment in Chinese assets right now, not just in Chinese capital markets. So there's been an enormous amount of outflows from Chinese stocks, the yuan and bonds. The bond market basically, offshore bond market basically doesn't exist anymore. But also FDI turned negative this year for the first time since 1998. So it's a big wall to climb when it comes to China, really convincing investors that first of all, that it's turned the corner in terms of economic growth, but also that it is friendly to foreign investment and that it won't kind of flip-flop on policy again the same way that it has done for 3 years and really burnt returns for investors.
Well, Xi Jinping just came back. I mean, not just, but he did have that trip to San Francisco where he met not just with Biden, but with business leaders too from America. What steps has he taken since then to try to encourage investment?
So he approved a deal that was pending, had been pending for a long time for MasterCard to operate onshore in China. That was good news. He's also kind of making it easier for investors to actually invest in China directly when it comes to capital markets. He made a speech saying that China will push ahead with further opening up. This tends to signal more movement. There he also visited Shanghai. This is China's financial capital for the first time since 2020, which was largely seen as a signal that more is coming. Soft power, though, Danny, more is needed in terms of actually concrete measures, because so far it's all been rhetoric. You know, the fact that Xi Jinping himself is doing this is a strong signal because it shows that it's coming from the top. But there's still a lot of reticence to believe in the China story. And I think one story this week that one of China's biggest investment banks is banned from being negative negative on the economy and banned from being negative on Chinese markets really shows that there's this transparency issue there as well.
Of course. Well, Jack Ma's back. And we had an investor yesterday that said we need to look at it the other way around, which is it's good news that Jack Ma's back and that he would invest in it. And he was an original investor in Alibaba, wasn't he, Danny?
Yeah, James Anderson. He was at Bailey Gifford. One of the first to buy Alibaba.
There you go. Jack Ma's back. Sophia, thank you very much. Sophia Costa on the markets. From China to Dubai, where it is all happening. COP28 is underway. The UK's King Charles, the President Lula of Brazil, have addressed the climate talks, and there are some early wins being scored on the commitment for climate solutions. Francine Lacroix is leading the charge there at the COP gathering. It's at the Dubai site. Francine, I could almost sing, Take Me Home, Country Roads, but I won't. Set the agenda for COP28. Good morning, good afternoon.
Yeah, good afternoon. Everyone here is asking, where's Manus? We can't believe you left before COP28, but there are 70,000 participants. Good morning to you as well, Danny. 70,000 participants, and they're trying to get back to business. Now, I have to say, it's only day 2 out of a 2-week stint, and if you look at a failure of COP, it only happened once. It was 2019, and it's when almost nothing happened after 2 weeks, so we still have time. Now, some of the things that are on the agenda, Manus, as you rightly point out, look, there's quite a lot. This is an annual thing. It's to try and make progress. First of all, there's a phase down or phase out, even of fossil fuel. This is, of course, a global goal to help the world adapt to extreme weather events. It's very unlikely that we'll get something concrete, but we could get some standards, for example, for carbon trading emissions, but also a new fund to pay for some of the damage wreaked by global warming. And on that, we had a bit of a win yesterday, because, again, I've covered COP for about 10 years. It's annual, and at the beginning, there's always quite a lot of fraught. There's companies and countries especially fighting to try and get stuff on the agenda. This time, the agenda was laid out without any massive friction, and they also managed to find this fund, the Loss and Damage Fund, which has some money, and we're expecting maybe more pledges in the last couple of months. One thing also, which is great, is that there's over 30 world leaders here. We heard from King Charles, we heard from others. The only two that are missing, Danny, is that we have the UN envoy for China and the UN envoy for the US, but we're missing their presidents.
Manus, I got to say, I'm listening to Fran talk about funding commitments. I'm looking at the beautiful backdrop behind her. Manus, can I just be clear here? A country road is a lot more rugged than a Dubai road. Am I correct on that?
You're absolutely bang on the money there. And I got to say, when they roll out a gig in Dubai, they really do roll it out. Go on. What's up?
Yeah, also, the distances are quite long, so it's, it is quite posh, but actually, just to getting from the blue zone to the green zone, it's a little bit like a country road.
Exactly. Have you been on the metro yet? Just answer me this. Did you arrive in palatial style, or did you go on the metro? Are you going to try the metro?
Manus, there's 70,000 people. I only take the metro. It takes 1 hour from central Dubai to here. It's the only way to travel. Now that I've said it live on Bloomberg TV, there'll be 120,000 people on the metro tomorrow, but it's the only way that you get around.
The Green Queen of
Francine,
of
let's be honest. Yeah, you're not going to be able to fit in that metro car tomorrow. All right, Francine, we're going to have to leave it there. Thank you so much.
But a lot of the delegates,
Francine Lacroix. We're going to come back to you. We're going to be with you all next week, too. She's, of course, live from COP28 in Dubai. All right, coming up, we're going to look at some of the market-moving events to watch throughout the day here on Bloomberg.
maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Names in global leadership are on Bloomberg.
What we've just delivered are significant tax cuts. For business, we will be the only major G7 economy, certainly, and even broader than that, where you get a total write-off against your taxes for capital investment. And it comes on top of the fact that our corporation tax rate here is lower than any other G7 economy. That's an incredibly generous regime to attract business investment.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in London. Manish Cranny is in New York. Let's take a look at what's ahead today. Get you set up for your trading day. We're going to have more data. S&P U.S. manufacturing PMI comes out at 9:45 a.m. Eastern. That's followed by ISM manufacturing at 10 a.m. Then it's a very busy day for Fed Chair Jay Powell. We're going to hear from him at 11 a.m. and then again at 2 p.m. New York time. If that's not enough for you, we also have more Fed speak. Michael Barr, Austin Goolsbee, Lisa Cook throughout the day. Manis, maybe to, I don't know, come ruin the bond market rally. But it's a busy day for your first day of December on this Friday.
It is. And if you go to my Instagram, shameless plug later, I'll sing you a Christmas carol with a Christmas tree. Ooh, there you go.
A delight.
You didn't think you'd get that on a Friday, did you? Let's talk about Tesla. I know we talked about the Cybertruck. I can see you around West London in the Cybertruck, killing it in
totally.
Fulham. But the stock's off 0.9%. Basically, because the prices of the Cybertruck that they've delivered, which is basically at the higher end of what the expectations were. So stock is off 0.9%. It's been a rough old week, though, hasn't it, Danny, for Tesla and Elon Musk, to say the very least.
It definitely has. It's been a good month for basically everything else, maybe including chips, but this chip maker Marvell is dropping Manis down nearly 5%. Its forecast for both EPS and net revenue lagged estimates, and then you've got another tech company there.
Yeah, we got Dell projecting fourth quarter sales falling short of the estimates. Now, of course, there is only one narrative. How much will Powell push back against the momentum of this bond market, down 65 basis points in the space of November, on doing a lot of the dirty work, isn't it?
It is, and we've heard from many people on the show, Manis, who have said because the financial conditions are loosening, Powell, the rest of the Fed, they're going to come back and they're going to fight against it, but that's not at all what they've done, is it? We've heard from a lot of speakers this week who seem to say we're at the right policy level for getting to 2%.
Yep, and will they stick to that? There you go. There's the month. The month that was, of course, puts the 60-40 portfolio back in vogue, and that's what Hartnett is talking about. It's been the best year for 60-40, but yes, it's been the best 60-40 performance since 1991.
Yeah, since the fall of the Soviet Union. But he warns Manis, before you think that's an all clear to jump in, it usually is followed by a drop. That's usually what happens after such a good run. All right, that's it for us on this Friday. For Bloomberg Brief, surveillance is ahead. Next, head to Manis's Instagram so he can sing you a Christmas carol.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast television.
Could be in this pre-recession period. Things could get much worse from here.
Our view is the economy is slowing, but it's relatively stable, and we're going to see growth into the first half of next year.
It's clear that there's more disinflation despite that growth.
What I'm really focused on right now continues to be the inflation data.
For now, inflation is still too high, even if moving in the right direction.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Hello, December, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Farrow. Your equity market on the S&P 500, totally unchanged. November, massive move. Let's talk about those moves. Up 8.92% on the S&P 500. Lisa, on the NASDAQ 100, up by 10.67%. Michael Hart of Bank of America, stat of the morning.
The idea that 40-60 to 60-40 portfolio had the biggest monthly gain going back to 1991. If you're talking about sort of everything rallying together, this is great. But Michael Hartnett, of course, had a note of caution within that, saying, just letting you know, it typically is met with a drawdown.
Mohamed Al-Erim with things to say this morning in a Bloomberg opinion column. Here's the quote from him. This extraordinary November was propelled by four key factors: Goldilocks economic data, declining yields, falling oil prices, and a surge in the deployment of cash sitting on the sidelines. Extrapolating all this forward, Lisa, is subject to important qualifications that might well be underestimated during a period of understandable euphoria.
Which is the reason why people are worried. At what point does the rally in bonds become problematic for the rally in stocks? I don't know if we're there yet. We're going to get some data today. We're going to get some speaking from Fed chairs. We're going to be able to get a sense of what the economic data is going to come out next week. That said, when are we going to find out the compass? Do you just buy until there is some reason not to? Or do you get cautious proactively, even though that hasn't worked again and again?
Well, let's go to the main event of this morning. Chairman Powell coming up a little bit later. Does he speak once or twice? I think it's twice. Chairman Powell speaking twice. Any pushback whatsoever to what this market is beginning to price off the back of what we've heard from people like Governor Waller?
I think that New York Fed President John Williams yesterday really set the tone. He basically came out and he said that, yes, we're seeing some of the most restrictive policy going back about more than 2 decades, and yet we're going to have to stay restrictive for some time. He basically was trying to kind of push back, but not really push back on some of the euphoria that Chris Waller set off. I imagine that he's reflecting what we're going to hear from Fed Chair Jay Powell this morning.
Jeff Yu of BNY Mellon coming up very shortly on all of this. Dan Ives coming up a little bit later in about 2 hours' time on this program to talk about drumroll, Tesla, Cybertruck. The speed of this thing, Bramo, just going through these numbers, forget the Porsche 911 Turbo S, 2.6 seconds to get to 60 miles an hour from zero. That is super fast.
I was also looking at the add-on where you could get 450 or something like that hours before you have, or 450 miles before you have to recharge. The key issue to me with the whole thing, and not to be Debbie Downer because I'm never Debbie Downer, but
not at all.
There's going to be a real question around when this will actually be available. The cheapest model isn't going to be available until 2025. Does that matter? Especially given the fact that they're trying to compete with the F-150 and their cheapest model is coming in at a price point a little above that. I don't know. These are some of the questions. I'm more focused on price, especially after a discussion with Ford yesterday, your discussion with GM the day before. Does price matter almost most of all at this next phase of EV development?
So without a doubt, yes, but margins do too.
Yes.
And you need to compare the margins over at Tesla to the other two automakers you described earlier this week. So we've got GM agreeing to a labor contract that adds what, 575 to each car they produce. Ford saying it's up to maybe 900. Tesla right now, and I say right now, Tesla right now doesn't have that problem. So did they have the opportunity to squeeze those guys even more on price because they've got bigger margins?
It's a great point, and it raises yet another question why they didn't come in with an even lower price for their Cybertruck. That said, it is a good point. How much is really the structure of costs going to determine the winners and the losers in the next phase of electric vehicle adoption?
Can you believe it's December?
I really can't on one hand. On the other hand, I feel like every month has been a full year, so I kind of understand. It does feel like it's been a kind of a long year.
The reason I say that, biggest bond move, we've seen yields lower since March. And of course, March was about hard landing Nirvana. November was about soft landing Nirvana. And March doesn't feel like that long ago when we were talking about bank failures going through spring.
No. Except the narrative is exactly opposite. Now we're talking about soft landing and everything is perfect, and they actually accomplished it. So this is the question. Have we really changed the narrative in a more concrete sense that can last for more than a month? I don't know the answer to this. And I think that one thing that we saw yesterday that people really didn't talk about was that continuing claims really ticked up in a material way and were the highest level going back quite a number of months. To me, these are the sort of signs around the edges that people will point to and say, look, we had it coming. There were the warning signs everywhere. And they also might just be, you know, false starts. So these are some of the things that I'm just kind of getting a little concerned about.
Are we pricing perfection? Let's get to the scores. Your equity market totally unchanged to kick off December. Futures going nowhere. Yields unchanged as well. It's almost like everyone's exhausted after November. Your 10-year, 432.23. Guess what? In the FX market, the euro going nowhere too. Lease of 108.88.
Yeah, and George Saravello is coming out of Deutsche Bank and saying maybe the ECB will actually cut rates before the Fed. We can get into that in a minute. 10 a.m., I'm watching ISM manufacturing. This to me is actually going to be really important, especially considering the fact that we've had more than a year of steady contraction in the manufacturing sector. Continuing to contract going back to or later last year. Do we continue to see that going out? Meanwhile, throughout the day, we're going to get Ward's auto sales in the U.S. to the discussion we were just having about pricing power, what we can see, how much we are seeing disinflation, as well as just movement of cars off the lots. We'll get a sense of that. And 11 a.m., Fed Chair Jay Powell speaking in Atlanta for the first time. He'll be speaking later in the day, I believe at the same event. Key question is, does he push back? Does he push back against the Goldilocks euphoria that they're going to cut rates early next year by saying that there are some stickier factors and that the data that we've been getting could be a potential head fake?
Let's get to Jeff Yu, Senior Market Strategist at BNY Mellon. Jeff, let's go straight there and good morning to you, buddy. Are you expecting any pushback whatsoever from Chairman Powell today?
I think the market is expecting pushback. I mean, the number of times over the last 48 hours, clients or colleagues have been asking, hey, do you think Governor Waller actually meant what he said? I think that tells me there's not really that much confidence that Governor Waller actually meant what he said originally, right? So that means the market, yes, they are trading risk on, they are trading risk, the easing in financial conditions, but I don't think there's a whole lot of conviction out there. So I think the bias is towards better take some of those risk on trades off right now.
If that's the case, Jeff, what did Governor Waller say that if he could go back, he would edit?
I think he would stress contingent upon data continuing to evolve in the way that they stress. So go back to data dependency. If it ain't broke, don't fix it. I think that point should have been elevated rather than maybe forewarning that potentially data or whatever they're seeing within the Fed data is starting to come off and maybe hinting, oh, I know something that you don't know in terms of the markets. I think it was maybe that confusion in terms of the forward outlook and, given his overall credentials, on the spectrum, all of that as a package, maybe he could have rolled back. But I think today for Chairman Powell, it's his chance to really set the record straight.
Can he really set the record straight, though, Jeff? And I say this because right now the market is saying, okay, you're data dependent, so are we. The data that we see, to the point we were speaking about with Neil Duddy yesterday, is a lot of disinflation in the pipeline. Is that basically going to be the message that the market is sending, regardless of what Fed Chair Jay Powell says?
So the second most comment that I've heard over the last 48 hours is markets are hearing what they want to hear. So I think we're going to get that sort of a reaction function today as well. If the market is now less biased towards easing financial conditions and risk on, and they're going to be if markets are going to prefer more wondering whether they want to go back towards some degree of caution and Fed higher for longer, then they are going to perhaps hear those comments from Powell a bit more, and then that will be reflected in asset allocation accordingly.
From a positioning standpoint, do you think that we've gone as far as we can go at this point and that we are set for some sort of retracement, that people are going to have buyer's remorse just a touch in December?
Well, if I look at the dollar, yes, because the dollar heading into last week, if we look at our custodial flow data called iFlow, dollar selling, which is a good barometer for risk appetite, risk on, that reached the strongest levels on a monthly basis this year, right? So that to me is a sign that it's time to mean revert. I'm not pushing back against the dollar valuations view per se, but when you get to that extreme, I think it really is time to really dial things back. If you've had a good rally, if you've managed to get back into the back in terms of P&L, maybe heading into year end, it's time to square things up a bit.
Take the rest of the year off, I think is the message there. Lisa shared that stat from Bank of America this morning, Jeff, from Michael Hartnett, the 60-40 portfolio up 9.6% in November, best month since December 1991. Jeff, when you say dial things back, what does that mean after everything's rallied? Where do you go?
So you get back to square, and if I look at the FX market, if I look at broader asset allocation, you go away from euro. Where can you actually recover a bit of, let's just say, risk off or dollar on, that kind of a sentiment? I would focus on what's going on with the Eurozone right now. As you mentioned earlier, one of my counterparts noting ECB will cut before the Fed. I absolutely agree with that. In the following order, ECB, then a quarter later, the Fed, and then maybe up to a quarter later, the BOE. I think that's how it's going to go. And the consumer and the services inflation aside, the key difference between the three of them, fiscal. One is cutting, one's pretty much flat, one is expanding. That's going to make the difference over policy expectations in the next 6 months or so.
Jeff, let's go further. The sequencing there. The ECB goes first. How early? And what's going to prompt it?
Right. So right now I'm looking at Q2, but I wouldn't even rule out March. Let's look at the forecasts for December. When they announce them. If there's a clear path towards inflation, core inflation even heading towards 2.5% or lower, then you need to start at changing your bias and looking at easing already. And people mentioned, what is euro dollar doing up here? When you look at the data in Europe and you look at the fiscal situation in Europe, and by the way, if you look at euro dollar strengthening, that actually accelerates disinflation in Eurozone as well, because it's a trade-oriented currency. Import prices start to come off. So the higher the euro is right now, the more likely that the ECB will move earlier. A combination of things, but I'm looking at those forecasts heading into December, heading into the December forecast round.
Before we move on, how much downside then do you see in the euro-dollar pair?
I see parity next year. At least we can touch that and then move on from there. Yeah.
Wow. Okay, so parity next year, which is definitely something that is quite a bold call, and I'd love to follow up with you in a little bit on that.
Absolutely.
But there's a question of how much there is going to be a cutting wave next year. How far is the ECB going to cut? How far is the Fed going to cut?
So from the ECB's point of view, I think at the minimum, when they start cutting, then they'll start maybe around quarterly increments. A lot will have to do with what will happen with PEPP as well. Just in general, in terms of can QT start? Can a QT stop in that context as well? But also, from the Fed's sense, what the Fed needs to look at is where does data take them from there, and also their balance sheets unwinding at a stronger pace as well. But if the Fed starts in H2, I think overall it's going to be a one cut per quarter kind of a pace to start off with. If data is more to the downside, then they can accelerate.
Jeff, pause. Headline: the euro back to parity. Jeff, you told us what your client conversation sounded like. I imagine you've shared that call with them. What did they say back?
Yes, absolutely. Not too much pushback, to be honest. And I think if I had had that call maybe, say, 6 weeks ago, before the Constitutional Court ruling on the budget, I would have expected a bit more pushback in terms of valuations and when the dollar is. But now, considering the dollar has fallen quite a bit and people are probably dialing back their dollar views, plus the fiscal situation in Germany and also the data is just not picking up, I'm actually not seeing too much pushback. You know, I was on the continent yesterday, so inner Switzerland, I'm sure they're not using the euro at that point, but I don't get the sense that there's too much disinterest in that view. But of course, when it comes to the franc, you know, they're worried about a weak euro as well, because then the S&B may have to start to reverse.
Hey, Jeff, love it. Fantastic. It's always good to catch up, sir. Jeff, you, FBNY Mellon kicking off our December coverage with a massive call in the FX market, looking for the return of parity on a euro against the dollar. Lisa, right now, negative on the session, just a touch, 108.86.
Three things. Number one, Christmas presents in Casa Ferro will be very good if it gets down to parity. Number two, travel. Wow, talk about reigniting that, because that's really fallen off a cliff in the recent months. And then three, what does this mean in terms of how far these economies can continue to diverge, right? Does this count on Goldilocks in the U.S. versus a deteriorating stagflation-like environment in Europe that's causing some sort of retracement by the ECB? These are really key questions to me, because right now we do not understand inflation. We don't understand why it rose as much as it did. We don't understand why it's coming down as quickly as it is. And people will come up with reasons and narratives to explain it. I have not heard one consistently that gives me confidence that we really have a sense of how quickly things are going to come down.
Do the people who control the Twitter account at the White House understand inflation?
I think not, and we can get into that. But basically, yeah, there's a community note on Joe Biden's comments, so that just gives you a sense.
I'm guessing the president didn't write that.
We can talk about this. We need a little more time.
I'll make some time in a moment to talk about it. Equities just about unchanged through most of this morning on the S&P 500. We're going absolutely nowhere after a massive everything rally in November. Hello, December from New York City this morning. Good morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Tuesday, a special episode of Bloomberg Surveillance live from Apollo's headquarters. Join Tom, John, and Lisa for exclusive interviews with top leaders in finance, including Apollo's Mark Rowan and Jim Zelter, about the state of private markets, recession risk in the new year, and deal-making amid high interest rates. It's all happening December 5th, starting at 6 a.m. Eastern on Bloomberg. Context changes everything.
Live from New York City this morning. Good morning to you all at home. The price action What a month of price action for November. December, things settled down. We're totally unchanged across the board here on the S&P, in the bond market and foreign exchange as well. Yields go nowhere. This morning, at least 433 on a US 10-year. But wow, did they go somewhere last month. Your 10-year yield in the month of November, Lisa, lower by more than 60 basis points. Your 2-year yield ended the month lower by more than 40. This whole curve shifting aggressively lower.
I'm glad you put it that way. You're talking about the whole curve, because there's some aspects of the rally that make a lot of sense, like people pulling back their expectation for short-end yields, the idea that the Fed might not hike or won't hike again, and that they might cut rates next year. The long end I'm less certain about. I don't understand whether we've actually understood that inflation, yes, is going to come down aggressively over the next 10 years. And oh, yeah, that the auctions don't matter. And I know that Tom would be rolling his eyes and saying, here she goes again, talking about the auctions. But the U.S. is selling more debt, and someone's got to buy it. And the question is, at what price?
TK back with us on Monday, by the way. Let's talk about inflation and inflation pushback. The president out with a tweet yesterday. I have no idea who actually wrote this tweet, but it's got the president's name on it, so we should probably read it. This is what he says. Let me be clear to any corporation that hasn't brought their prices back down, even as inflation has come down. It's time to stop the price gouging. Give American consumers a break. Chorus on Wall Street, led by Jim Bianco. Apparently, he does not know the difference between prices rising at a slower pace and prices falling. It signals he does not listen to Secretary Yellen because she knows the difference.
It's not great when the president needs community notes underneath his tweet to explain why he's not exactly getting it right. So then, does he understand, or do his people understand the difference between slowing inflation and deflation? Or is there a sense that he's trying to cater to a certain political anger that has created a real negative draw on his polling? I mean, it feels very political, and yet I wonder if anyone said, you know, just letting you know, it's going to seem a little off considering it's economically wrong.
Without doubt, it's the latter and not the former. I refuse to sit here and believe that someone like Lael Brainerd of the National Economic Council, Janet Yellen, Treasury Secretary, don't understand the difference. Of course they know the difference. This is pure politics and nothing else.
And it's coming at a time where he was talking about price gouging with gas prices, and gas prices are now the lowest going back to January. And this raises this question of, okay, well then what is the coherent policy going forward if the Inflation Reduction Act was more geared toward certain infrastructure building? What is their plan to message this? Not necessarily to address inflation, but to message this heading into next year.
Did you get a coherent policy view last night in that debate?
I got one very clear message.
Which was?
And Gavin Newsom said that pretty directly, which is that neither he nor Ron DeSantis would end up being the 2024 nominee for president.
His view. Let's get another one. John Lieber joins us now, Managing Director at Eurasia Group and former policy advisor to Senator Mitch McConnell. John, great to catch up with you, buddy. It always is. Let's start there with that debate yesterday evening. The governor of Florida against the governor of California, Sean Hannity of Fox News in between. Surely Sean was the only winner, John, last night.
Yeah, it was more like a wrestling match than a debate. I mean, it was painful to watch, just the two governors shouting over each other, trying to insult each other. You know, most of these debates these days are framed around a politician trying to get their talking points in and get their one-liners out. Both guys achieved that for sure, but I don't think either of them really helped their case that they should be the next president of the United States. And of course, as mentioned, Newsom's not going to be the nominee because Biden's blocking his lane. So this is probably more of a preview for 2028 if DeSantis can still find a way to be relevant in another 4 years. But that debate was painful. I don't think it did anyone any favors.
Find a way to be relevant. Are you basically saying that the nail is in the coffin for Ron DeSantis' bid to be the Republican candidate for president?
Yeah, I think it's really unlikely that anybody not named Donald Trump is going to be accepting the nomination in July. And his polling lead is just so massive, and he is so dominant inside the party in most of the key states that really matter for the primary. Nikki Haley's having a little bit of a boomlet right now, trying to consolidate the support of kind of the donor class of Republicans who are really key to making sure that she can make a deep run into the primary season. But the donors aren't the ones that vote. It's the voters that vote. And right now, the voters are telling pollsters, at least, that they strongly favor President Trump in this. And DeSantis' window might close. I mean, this is kind of, we've seen this before. Chris Christie was kind of the hot thing in 2012. And by the time 2016 came along, the world had moved on. And that could happen here to Ron DeSantis if he doesn't find a way to be competitive in this nomination process.
Let's talk about President Biden. You said that he was blocking Gavin Newsom's lane. Let's talk about his presidential re-election bid and this tweet that we just read, how he's messaging the inflation story. What do you make of the fact that he basically put out something that was just economically incorrect in terms of disinflation versus deflation?
Yeah, I don't know who's running the White House's social media account, but they obviously aren't big surveillance watchers, because this is a complete nonsense. And, I think they're looking for somebody to blame. They know inflation's going to be a drag on President Biden in his reelection. And by creating bad guys out of American corporations who they claim aren't dropping prices, they can point the finger at somebody other than themselves. And that's all this is. It's a simple political narrative. It's not going to work. Consumers are still deeply upset about inflation. Inflation, unlike economic growth, is really something that consumers see every day in the prices of the stuff that they're buying. They know price levels, even if the growth rate is down, price levels are much higher than they were 2 years ago. And they see it in all the consumer goods when they go out to eat at restaurants, and people are mad about it. And it explains this disconnect that I often get asked about why, the unemployment rate is low, jobs are being created, but people are unhappy. And the reason is prices are higher, and the American people know it.
They're frustrated, Bramo. We've talked about this a million times. John absolutely nails it. People at home feel like politicians are gaslighting them every time they talk about prices in America. The cumulative inflation over the last 3 years is real, and people notice, as they should. Prices are higher.
Especially because it's things like rent that is something like more than 20% higher. It's things like groceries. So then how do you challenge someone's feelings with economic data that is confusing? I mean, it isn't on an economic perspective when you just take a look at it and what disinflation actually is manually, but the trajectory of it and what it means and what it will actually filter into how people feel, that's a lot more complicated.
So, John, this story was even more true in the midterms last year. It didn't kill them. It didn't kill the Democrats. John, why will it next year?
I think Biden carries the blame for inflation in a way that the congressional Democrats do not. And of course, the big issue in the one thing that really matters when looking at trying to understand who's going to win a campaign is what are the top issues that people care about. And last year, for sure, inflation was an issue. But the overarching issue that drove Democrats to the polls last year was over access to abortion. And this is something that's been a tailwind for Democrats in every election since the overturning of Roe versus Wade. It will probably help Biden next year as well. And it's one of the reasons that I think he can overcome some of the major deficiencies that he faces in his reelection campaign, including the bad vibes around the people's feelings about the economy. So I think that people vote for complex reasons. Inflation's one of them. Abortion's another one. Republicans are going to show up to vote on immigration and crime and a totally different set of issues. But inflation's only one part of the mix here that's going to be weighing on Biden's reelection.
Hey, John, you're one of the best. It's great to catch up. John Lever there, of your Razor Group, on the inflation story in America and what it means for the politics of next year. Great TV last night. Just great TV. I just get the feeling, Gavin Newsom and Sean Hannity honestly should have a show together. I've seen several exchanges with them, and it's just absolutely brilliant. Honestly.
They both enjoy the game of it.
We want to see more of this stuff, I think, more debates. You might not be happy with the character, the tone of the debate, but honestly, I'd much prefer to see people on stage talking about big issues than hiding away on Twitter, pounding away and saying nothing.
I would agree with that, and at the same time, this is the problem, is that the former president, Donald Trump, has not attended one Republican debate.
Hasn't needed to.
And he hasn't needed to. So at what point do debates become liabilities for people more than anything else if the candidate's already almost a lock?
True. AMH is coming up to talk about this. We'll catch up with Anne-Marie in the next hour. Coming up shortly, Sarah Hewen of Standard Chartered from New York City this morning. Good morning to you all. Welcome to the month of December. Just 1 month left in 2023. From New York City, this is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we